Boom. We are live. Happy Tuesday, Zinger Nation. Great to have you guys back on another episode of Benzinga Live. We've had a pretty eventful first 2 days in the market of 2022. Of course, yesterday the big headline was Tesla up more than 13%. Today, Tesla's trading down, but wouldn't you know it, Ford is trading higher, another EV stock. So we'll be talking about that. We've got David Green joining us here in a couple minutes. We'll be doing some live trading with David Green. Then after that, we've got NeuroOne CEO Dave Rosa joining us, Robert Roy from Wealth Builders HQ joining us after that. And then an executive from Hoth Therapeutics, which Hoth, ticker HOTH, is a big high flyer today. So second day in a row, we're bringing you an executive from one of the hottest stocks on the market. But without further ado, let's go ahead and get the show on the road and bring David on. Boom!
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. David Green, Mr. DG, how we doing today?
What's up? Welcome, my Benzinga family. Happy New Year to everybody. Let's start off by saying that. Hopefully,
yes, sir. Happy
year.
Happy New Year to you as well. In that intro video we have, there's a sound clip of me saying, someone told me to buy high, sell higher. I think that might have been you that told me that.
The trend is your friend, right?
Maybe not. I don't know. We'll see. All right, what are we watching today, David? I see I see AMD.
Yeah, we've had a big sector rotation today. I don't know if that it makes any sense or not, but again, we don't care. It is what it is, right? Cyclicals have been on fire today. Caterpillar, Triple M, along with the financials. So we've had a little rotation going on. Tech is actually doing not much of anything, down a little bit. Apple was down a little bit this morning. So our concentration today has been on the chip stocks, NVIDIA and AMD. These stocks have had some wackadoodle movement already this morning. We had a bunch of good trades in these things this morning. We're looking to short these things now if we get big rallies because they've been down so much, and now they're moving up to some trend lines on the upside. How's everybody doing in Benzinga land? What's up, Voodoo? What's up, Tiny Pine Media? Loading up time on Palantir. We can talk a little bit about some long-term stuff. I added a couple of little things before the end of the year. Let's look at Palantir long-term. Palantir has been dead money for so long, right? This was everybody's favorite for a while. It's just sitting in the middle of everything. Not much there. One thing I added today, guys, and again, this is not financial advice or anything of the sort, but I added a little Vroom today. We were looking at the daily chart in Vroom, and this stock has been in basically a year-long downtrend. And we're thinking if it can show its little head above here, probably break out about $12. It's got some room up to 16. And this morning it got to 11.90. So I have a small little swing position in VRM that we started today. So far, you guys know, is one of my favorite stocks. We have a small position in that. I'd like to get it a little cheaper than where it is. I think we're in this stock around $14.50. That is one of my year-long holdings. Yes, the banks are pumping today. It's funny because every time when we come on here around 11:30, you can look at every single stock that we're looking at. The volume is like, it's Deadsville by this time, right? So a couple of the trades that we have, you guys, NVIDIA right now could be setting up for a little shorty up at this 288.50 level. See, we'll explain what I'm looking at now in the video, right? The stock is in a downtrend, obviously, all day. It gave us a couple of good trades off pivot points earlier this morning for quick bounces. So now it's approaching our 15 EMA at about it's actually right there, 288.50. So a couple peeps in the room just did a little short in the video. This should be a resistance level now. And anytime we do a trade, guys, you know, we have a stop order. But this is what we call a trend trade. If the stock is going to stay in this trend, it should test this level a little bit and then give us a little trade on a pullback from there. Obviously, we got to watch the market now, right, and see if the market's starting to bounce up a little bit. And you can see it is, the market's kind of pushing up against its first little resistance level here. But again, the thing with trading at this time is there's just not a lot of volume in anything.
And David, do you have any insights into if you think 2022 is going to be kind of a down year because S&P was so great last year, or you think it's going to be a strong year, or are you just more taking it day by day?
As a trader, right, Aaron, all we do is take it day by day. Real quick, trade NVIDIA. It just got to that 288.50 level. First profit was 50 cents. What it just gave us, guys in the room, we get that one for a quick 50 cents on the first little profit. So again, here's your resistance level. It hit 288.50. Just gave you a 50-cent profit in what? A few seconds. So we would have covered half of that trade for 50 cents. Bring our stop up to break even now and see if we can get a breakdown a little more. Look, we take everything day by day, right? I do think that, again, this is you don't have to be a genius to make a call like this, but I think we're going to get at least a 10% correction at some point this year. I am short a little bit of the market right now. I am short by being long a little VXX. Look, nobody can pick tops or bottoms, but I do think we're going to get a little correction at some point this year. Otherwise, we take it day by day. Look, anyone who wants to talk about long-term stocks, we can absolutely talk about. Is VRM a falling knife? Well, I'll tell you why we're looking at VRM. And again, we're going to have a stop order in this thing. But if I go to the daily chart in VRM, okay, I'll explain to you why I'm looking at it, Dave, on a daily chart. Okay. Look how long this stock has been in this major downtrend. And, just yesterday and today, we poked our heads up above it a little bit. So, I mean, we're long the stock right here at 11 bucks, exactly right here. So, you know what? I'll have a dollar stop. If it goes back to 10, then that tells me it's just dead money and it's over. So I'm only risking $1 on this. So hopefully, maybe we'll see a little breakout here and we got room to the upside. Even with my long-term swing trades and everything else, guys, it's all about technical analysis. That's what it's about. And when I see something like this, that it's been in this trend for basically ever. I mean, this was a $75 stock, right? And, a few months ago, it was a $37 stock. So we're taking a shot on it with very low risk and high reward. That's what we're looking at in that trade. When David's volume is okay, AB's is very loud. Okay, I don't know if I can help you with that. So you can see now the video is kind of deciding what it wants to do here at these levels, right? If we break below the 15 EMA about 287.40, we start heading back down. It'll be a really good trade. 50 cents in the video, put sold, going to cover one here. All right, good, Brian. Excellent. Yeah, so I don't know. What do you think, Aaron? What do you think's going to happen? What's your predictions for the rest of the year?
David, I've learned one thing in my 24 years, and that's that I don't know anything. So, I think traditional wisdom would tell us that with, the S&P 500 being up 27% or whatever last year, that, there may be some reversion to the mean and the markets may come down to earth. But with that being said, I think there are a lot of economic, indicators that are pointing that this year will be very strong. And, they're readjusting the GDP, or, they're saying maybe we're going to be back to full-fledged economy faster than what some people anticipated. So I don't know. There's a lot of factors out there that could make it either a very strong year or not so strong year. I think we just got to wait and see.
Yeah, I'm with you 100%.
So that's my long answer of saying I don't know.
That's the best answer in the world. Whenever people ask me, Dave, what do you think the market's going to go up and down? My answer is yes. It's either going to go up or down. I have good faith in that's this year the market will either go up or down. Exactly. And as far as, we're day traders for the most part. We do some swing trading and options trading, but we're day traders. So I'm only looking at what's happening, in the next 5 minutes, right? So again,
but even as a day trader or swing trader, you got to kind of keep your pulse on what the overall market is doing as well, because that will impact the assets or equities that you're trading.
No question about it. Especially as a swing trader, if we're getting involved in something that we're only going to hold for a few days, we got to have our finger on the pulse as to what's happening, everywhere. So absolutely. You took $1 in the video, Nora. Excellent. So again, here, guys, a couple of people just took $1 off this trade. You know, it happened live, 288.50, just went down to 287.50. When stocks are in trends, guys, all right, and this is important for technical analysis. For those of you guys who don't know, I'll give you all the technical analysis that we're using. We use a 9 exponential moving average, a 15 exponential moving average, a 65 exponential moving average, and a 200 exponential moving average. When stocks are in trends like this, and a stock rallies up to one of our trend lines, the odds are, and again, guys, everything we do and every trade we make, we do not make until the odds are in our favor of that trade working. So the odds when this stock goes from 283 to 288 and hits a resistance level is the next move is going to be down. And you got a nice dollar trade out of that. Ford is ripping. Ford is a lot of people's favorite stock for the year also. I mean, this stock has had an incredible recovery. You know, if we go back to a weekly chart, the stock was trading at what, $5, right? $5 2 years ago. I talked about this actually a few weeks ago, and we liked the stock when it was trading around $22. Now, am I going to be a long-term investor now? Probably not. I would wait for a pullback. The relative strength is historically high right now. And when we talk about relative strength, guys, when the relative strength gets up around 80, which we're seeing right now in Ford, you know, there's probably a good chance we'll get a little pullback from here at some point. But great stock long-term. They have turned that company around. It's basically like an EV stock now, right? Someone asked me about Lucid earlier. Hold on, let me just check. Myrna, Roblex. Yeah, Roblex didn't quite get to the trend. It did it early and worked. I'll tell you what, guys, Myrna for us the last few days has been just an incredible trading vehicle. This stock is so volatile, and it's been incredible. Just look, this morning the stock traded as high as 240 and gave us a shot down here at $225, right to a support level on one of our pivot points. So in addition to our moving averages, guys, we use pivot points that show us support and resistance where we might want to buy a stock or sell a stock. And this got down to 225 and quickly gave us a $3 bounce off there. So these are the kind of trades that we're looking for during the day. Buy 25. No, I would not short. I would not short for it. No. Another way to get long it, though, is to sell longer term calls. Let me look at Amazon. Well, Amazon is not ripping. It's bouncing again, probably from an oversold position, right? 34.29. The stock went down basically $100. So now, if we look at Amazon, right, I wouldn't be a short seller in this anymore on the trend. If we did the first trend trade when it got up there, it gave us a $2 trade. Now, there's a better chance that this stock could break out and start going higher from here because it's above our short-term trend lines with a lot of room until we get to a next trend line. Doku sells short. AMD still good. Let's look. Let's look, guys and girls. No, I don't like AMD short anymore. It's taking too long to get there. One thing we want, guys, especially if you're going to use our technical analysis, you want speed. You want stocks to get to the levels that we're looking at as quickly as possible. Going to be better trades. I think we ended last year with a little over an 80% win rate on all of our trades, which, again, isn't that important unless you're doing proper trade management and you don't let your 20% of trades wipe out your 80% of good ones, right? So money management and trade management are the most important things once we learn our technical analysis. You know, I have people who tell us that they have a 90% win rate, but what good is it if on the 10% you lose more than you made on the 90%, right? It's crazy. No AMD, guys. Everything's kind of just flopping around now. Doku, I like the short. So here's Doku, guys. All right. Technically, stock is coming up from $149. Our 65 EMA is at $152.35. That would be up $3.35. So here we go. The odds, and again, we don't make day trades until the odds are in our favor of the trades working. The odds of this trade working after going up $4 and hitting a resistance level are about 90%. We would do our full amount of shares on our 65 EMA, stop order goes above, and we look to take our profit on a pullback from there. Do not short. I mean, listen, I'm not telling anyone what to do. No, Ford is not a short. Why would you want to? Here, this is a great example of what we were talking about earlier with Adam, right? The trend is your friend, right? Look at Ford. Stock's in a strong uptrend. Why would you even consider shorting it, especially at 24, 23? You know, there's nothing technically telling us to short it there. And at best, you're going to make 10 cents out of that trade. So the answer to that one is a big negative. Affirm is a stock that we watch every single day. This one's been getting beat up a lot lately, right? We were looking when it was getting spiked down here to get down to our 81 level. That was our pivot point, which would be a really nice spot to buy it. But let's look at a daily chart on Affirm. So look at our daily chart, guys. This is an ugly looking stock right now, right? But there's going to be a point. Let's go weekly, first of all. I think we might have some level. No, we don't even have weekly. So how do I approach a stock like Affirm if I like the company and I'm thinking about buying the stock? We go to a daily chart. We have had 1 day down from 105. We have had 2 days down. Now we're trading at 84. Here's what we need in this, guys, and make a note of this. If we get a relative strength of 20 in AFRM on a daily chart, that's where I want to start buying this for a swing trade. So if we get another day or two down and the relative strength gets to 20, that is going to be where we will start looking to buy some Affirm for a swing trade. You know, forget about being down from $176. We get that. The stock's already been cut in half. But if we quickly go, you know, from 105 to 70, 75, we will get a bounce off that. So I always look to do swing trades when a stock is down at least 3 days in a row and the relative strength gets down around 20. These are all great tidbits, guys, that write them down. You know, this is something that we teach in our course at Wall Street Global Trading Academy. And it's something that I'm going to offer everybody who's watching here today to come into my room and hang out with us for the next 5 days. And we will go over every single trade that we do, explain why we're doing it. So everybody gets a 5-day free trial. Just go to my website, dgreen927@yahoo.com. Right after we finish this, you can come and hang out in the room for 5 days. We explain every single trade that we do. NUE, yes, we watched that again this morning. Almost got down to a good level, right? NUE is a good trading stock, too. I mean, it's kind of flat on the daily right now. It's not doing much, but it has its moments. FIRAT, no thanks. That's okay. What we do is not for everybody. But those who come in and spend 5 days with us that are serious about learning how to trade will learn more in that 5 days than they learn anywhere else in 5 years. But to each his own, as I always say. Doku. Yeah, again, I like Doku short if we get up to that level. And guys, it's lunchtime. There's absolutely nothing going on. Everything's kind of dead right now. You guys want to pop up some individual stocks. If you guys want to talk about short-term, long-term, I have no problem looking at that for everybody. Myrna on the 65 EMA. No, do not buy Myrna. That's sloppy now. It's in between everything. I would not buy that there. ZM. Let's look at ZM. Another stock that's COVID stock that's gotten quite beat up, right? So if we go right to the daily chart, guys, there is nothing telling me to start getting involved in ZM yet. And the weekly chart is just as bad. So I don't see any catalyst for ZM to make any kind of significant rally from here, unless it gets really stretched out on a daily or weekly level. Then I could see doing a little something, something, something. Bank long term is not something I ever trade, Lloyd. You know, we don't trade it because it doesn't have any volatility during the day. But this is another one. Look how stretched out it is now on our daily chart, right? You know, this is $4 above the moving average. I mean, I like the stock, but I'd like to buy it back on a pullback. Who's a-hole on Benzinga? I don't know. You can have whatever name you want, guys. NVIDIA, let's look. Moving it now to lock in a 50-cent profit. Excellent. So you guys, you see how NVIDIA is kind of trying to break down now off our trend trade. It's already given $1 profit. So now you move your stop up to lock in at least a 50-cent profit. And hopefully it keeps going down from here for the rest of the day. Yes, Caterpillar, Deere, Triple M, all those stocks are having big days. And this is part of the rotation that we said into the industrial stocks, right? They're all having a really, really good day. Look, at the beginning of the year, there's a lot of maneuvering and moving around, right? Hedge funds and mutual funds, you know, they're doing a lot of different buying and selling of different stocks to get themselves set up. Some of them were didn't have enough of certain of these stocks that they have to buy a bunch of them now. UPST was a stock, another one that I like. I like long term, but I'd like to see it get a little cheaper again. Right? Again, look how bad this chart is, right? So here's what we don't get caught in, guys. The stock was $401. Now it's 136. A lot of people are going to look at this chart and say it has to go up. It doesn't have to do anything. We look for technical levels, and here it is. If you want to make a little note, I will be a long swing trader in UPST if we get down to $96.70. That is our 200 EMA. That would be short term down from 157 to 96. Got a 95% chance that we're going to get a bounce off that level. Lucid, that's another one that a lot of people are looking. That's had a very
Lucid. That's one of our retail investor favorite. Actually, we did an article, David, about the most searched tickers on Benzinga for 2021.
Yeah.
And I think you'd be surprised. Both Lucid and Neo were in front of GameStop.
All right. I'm not really surprised at that. I mean, you know, GameStop since that big Mimi Beamy thing, you know, nobody has talked about it for a long time, right? It might have a day here and there where it does something, right? Look, everybody knows how I feel about GameStop and AMC. They should never have been trading where they were. I don't think they should be trading where they are now. So AMC, we have been on a short from $62 in AMC. And the stock is now down to $25. And in no hurry to buy it yet. Let's just put it that way. I think in AMC, you're going to see a secondary offering coming out soon. They have a crap load of debt that I don't see how they're going to get out of. But anyway. Diamond hands, guys. Diamond hands. We don't have diamond hands here. Thanks, Dave, and everyone for another green day. I'm going to follow the rules and head out. Excellent, Jason. Beautiful. Excellent. Excellent. So let's look at Lucid, guys. Yes, we wanted to talk about Lucid. So whenever I want to look at a stock, I always go right to the daily chart, right? And we see Lucid made a high of 60, got down to like this 38 level and just hung out there forever at this 38 level. We finally broke out. Let's call it 39. We're right back at 39 now. So again, this is, for now, to me, this is dead money. There's nothing to do in it right now. If we go weekly, same thing. You know, we held the levels. We held that $37 level. So here's my line in the sand in Lucid if you like it, right? If the stock breaks 36, you can't be in the trade anymore. Technically. Now, I know there's a lot of people out there that get into these stocks and they just stay in them because they love them. Well, that's not what we do. That's not how we trade. Space is another one that was a big one, right? This was another isn't this Muskie Space? No, it's what's his name?
Branson.
The other guy. Yeah, Branson. So if we look at a weekly chart in Space, look at this thing. $62 trading at 13. Is there anything here? They don't make money. They'll probably never make money, right? So I mean, finally, valuations come, catching up to the hype. But if you believe in Richard Branson and you like the story, okay, you have a little bit in your. This would go in my. I don't care if I lose it all portfolio at this point, because basically it is a lottery ticket now. That's what it is. It's a lottery ticket. Microsoft is one of my long-term favorites always. I like to buy Microsoft whenever we get a big dipsy doodle, right? This stock is just 10 years from now, Microsoft is going to be higher where it is, and in 20 years, it's going to be higher than where it is. Microsoft, Apple, NVIDIA, all those stocks I love when you get any big dipsy doodles to get back into them. I'd love to see Microsoft around 300, 292. That's a daily spot to get in. Jason, this is your second day in a row that you've hit your goal and you're leaving. Excellent. Nice job. Pins. Let's take a look at PINS. PINS. It's another stock that had a lot of hype in it at one point, right? $90 pins. Okay. So again, everybody, I'm just looking technically at these things. I mean, this stock is just horrible. It's horrible. That's the bottom line. We would have to get back above 36 in pins to show any strength to maybe get a bouncy bounce out of here. Again, to buy it, maybe if we get 3 days in a row down and we get that relative strength down around 20, that would be a good spot. But all these stocks just look horrible technically. You know, one of the things we try to teach people to avoid at all costs is what we call FOMO, guys, right? Everybody knows what FOMO is. Fear of missing out. When some of these stocks are ripping up and everybody says they're going, you know, to 100 and 200, stay away from stocks like that. It's just not going to, those things never work out in the long run. So again, technically, guys, look at NVIDIA. Now we're starting to come in more off that trend trade. We're up almost $2 on that trade now. And hopefully this thing will keep going down and make a double bottom. I know we don't have a lot of time because we only get a half hour with you guys at these times. So again, greenroom-live.com. If anybody wants to, I'm sorry, dgreen927@yahoo.com. If anyone wants to come and hang out with us for the next 5 days, they'll post it up there. dgreen927 at yahoo.com.
I got you, Mr. Green.
Also, one other thing I want to mention, which I always do, is Benzinga Pro, guys. Most of the people who I trade with are using Benzinga Pro. I don't think I could actively trade without it. It is as important a tool as any of our moving averages are. It is. I know we give a 2-week free trial. It's silly not to take advantage of that free trial, guys and girls. And trust me, it is important as anything else that we use here to make our trading decisions. Do I see Spencer there?
Yes, sir.
Yeah, I'm here.
Look at Mr. Spencer. Happy New Year, my friend.
Happy New Year to you too, sir. Hope it was well. Hope everyone's staying healthy down there.
Yes, so far so good. Thank God. Thank God.
The year is young. The year is young.
I know how much worse can it get with what's going on, right?
There's still time, David. There's still time.
Well, I can tell you one thing. Overall, just to wrap things up, you know, the market is not too afraid of COVID or Omicron or anything else at the moment.
Yeah, that's the truth.
That's the bottom line.
You know, I'm getting blown up right now with price alerts on Palantir. This thing is flirting with. I'm
diamond hands, Spencer.
I'm flirting with disaster right now on Palantir. Not disaster. I'm flirting with the sell button right now on Palantir. So
no, don't sell Palantir. I'm a buyer. It's at 16 long term. So if I'm in Palantir right now, I'm adding at $16.
Well, I'm not in it. I'm not in it long term. That's the difference, though. I mean, this is for a trade. But,
okay.
Yeah.
Well, if you're in something for a trade, you got to have a stop order, right?
That's it. That's it.
That is it. But I will start buying some Palantir if we get down to that $16 level.
Yeah, Shelly, it's a mental stop loss. It's a mental stop.
And we all know that those are the worst ones to have.
Well, no, because if I had a stock, if I had an order out there, I would have already gotten filled, and I don't necessarily want that, yet.
Okay.
Wait. Will S says you put Salesforce up, but didn't. There, Salesforce is on the screen right now.
Yeah.
Do you have a comment here?
Why is Salesforce ticker CRM?
Because that's what it is. Salesforce is a CRM. It's
That's
customer resource management software.
Why is the NVIDIA symbol NVDA? Does that have to do with a chip of some kind?
Yeah, I think so.
Yeah, mental stops never work, Tiny. A mental stop means you're not willing to take a loss. That's what it means. All right, let's look at CRM a little longer term. Let's go to the daily video tape. All right, so to me, this is day one. Usually when you have a stock that does something like this, guys and girls, okay, and it closes at the low sale of the day, you're going to get follow through, usually for another day or two. And again, this is the same thing. If I see something like the Salesforce down 3 days in a row and we get a relative strength down around 20, that's the time to start buying it for a trade. And we are at, I didn't even see this, guys. We are at a huge level in Salesforce right now. All right. If you look, we went from 311 and hit our 65 EMA at 245. Look at the bounce we got off that first time. 245 to 261. Well, here we are again, right? So I can tell you this, guys. If we do not hold this 245.11 level again, it is not good technically. That's all I will say. Usually the second time something hits something, it does not hold that level. And it's exactly 246.29 is the level. We're about 75 cents away from that. Where is the next level if we break down? Well, let's take a peek. There is nothing daily. Again, I'm not saying the stock is going to get to this level, but my next technical spot is $195. That's the next technical spot. So, risk reward wise, if this is a company that you really like, okay, you're in it here, but if it breaks it by $1 or $2, you're out, and that's it. So that's Salesforce. It's at a very big spot right now.
All right. Salesforce, for whatever reason, today notwithstanding, for whatever reason, yesterday, Salesforce decided it was going to go against trend and outperform all the rest of its peers. But yeah, obviously today it's playing a little bit of a catch up there because it's not having a great day. But
was Salesforce one of the ones that Nancy Pelosi just bought options in?
I have to admit I do not pay close attention to that. So
I'll look it up.
I can't tell if you're joking.
Oh, no.
Okay.
No, it was.
No, she did. Yeah, someone in my room said she bought a couple of million in call options.
Dude, that's okay. You know what? All I'll say is it's ridiculous, but the world has far bigger problems than congressmen trading stocks. But that being said, it is ridiculous that this is illegal. But whatever.
I agree that it's ridiculous that it's legal, but it's more so like I don't get pissed off by it. I just think like, oh, she did that. Maybe I should look at those calls because she bought like some ridiculous Tesla calls like 2 years ago. And they looked insane when she did it, and then they were up like 1,000% because Tesla went crazy.
I mean, let's just put it this way: she's done very well with her portfolio, so leave it at that. I don't follow anything that anybody else does, so I really don't care. But she's done okay, so it seems. And I guess it's good to follow until you don't do okay.
That's true,
right? How's Nancy Wood doing this year? Okay, she's off to a good. What's her name?
Kathy Wood. Yeah, I mean, look, it's been a tough day for growth. So
Yeah, exactly. I mean, I think she was down 25% last year in this fund anyway.
It's not an accident. It's not a coincidence that her best year ever was followed by her worst year ever. Right? I mean, that's kind of how these things go.
Yeah, exactly. And her best year ever was like 300%. So it's not like anyone who's been with her for any. That's what I'm saying. I don't like when people hate on anybody, right? Because they look at 1 year performance, but she was up like 300%, 400%.
Right.
Yeah, I mean, people were hating on her like last like March of 2021 when ARK had been down like 5% to start the year, and it was like, okay, but it was up 200% the year before. You're still up 195%.
Right. The fund
have some perspective, people.
More than that, guys. The fund went from 33 to 160, guys. From 30, that's 500%. Okay, that's a 500% profit.
That good.
So she gave back 25% of that in 1 year.
Yeah, I mean, to put it in context, the past 5 years, so going back to January 2017, ARKK is up 327%.
Okay.
So 327 divided by 5, that's more than 60% annualized return on average. So the fact that it's off of its highs by 40%, yeah, it's not good being off its highs by 40%, but when you put it into perspective, it's not too bad.
Yeah, you're still up 200% if you were with her from the beginning, right?
Exactly.
And this is a great example for everybody out there that no matter how good long-term investment you're in, it's prudent to take profits at times.
Oh,
right?
Yeah.
It's prudent to take profits at times. I mean, if you have a 500% profit in something, why not sell half and try to get in at a cheaper price, right? It's like when you're in SoFi long-term and you get a chance to take some off at a profit and you don't, and then you watch it go back down to $14, it's just not prudent. Know what I'm saying, Spencer?
I know exactly what you're saying. All right, David Green joins us every single Tuesday to hang out for a few minutes. We appreciate his time as always, David. A pleasure. We'll talk to you again next.
I appreciate you guys allowing me to be here. I really do.
Have a good one, sir.
D Green.
Oh, sorry.
dgreen927 at Yahoo. I'll throw it back up
Yeah.
on the screen for David there. Shoot him an email, say, hey, I want to check out the room or whatever it is, and we'll get you all set up there.
All right. So the story of the day, it's a very straightforward one, right? The story of the day is that value is working, and if you own a tech stock, it's probably down, right? It's kind of the same as what we saw for most of last year, right? If you look at just what's up and what's down, banks are up, oil is up, right? Industrials are up. Tech is not, communication is not, cyclical is not. It's just kind of the way it goes.
I have a non-market related,
pretty cut and dry.
I have a non-market related story.
Yeah. Okay.
Kind of a nice little feel good story. Spencer, you've probably seen this because you keep your finger on the pulse in the sports world, but I don't know if most of our audience has. Seattle Kraken fan, you hear about that?
Oh yeah, I did hear about that. That was pretty wild. That was pretty cool.
So essentially, to give everyone a rundown, so Seattle Kraken, the NHL's newest team, of course, in Seattle. A fan was sitting like right behind the glass, and she noticed that it was like
the equipment guy,
the equipment manager of the Seattle Kraken or something. If you've ever been to a hockey game, sitting near the glass, you're like really close to the bench of these guys, and she noticed a mole on the back of this guy's neck, and she wrote a note on her phone and said, like, hey, go get this mole checked out. It looks cancerous to me. Got the guy's attention, showed him the note on the phone. He goes, gets checked out. Of course, it does end up being cancerous. They get it removed. And it's just an incredible story. And then they awarded her like $10,000 toward her medical school debt. So just an all-around feel-good story. But it's actually not the first story I've ever heard kind of like that.
Me neither. There was an incident on the news last year.
Yeah, well, there was, and even before that, there was one with what's the TV network where they do all the like buy and flip homes and stuff?
HGTV.
Yeah,
I think that's what I'm thinking of.
Well, there was an HGTV host,
yeah,
that had a mole on his neck, and someone called in from their couch. Someone's just watching TV on their couch and said, like, "Hey, man, like you should get this checked out." Same thing. He ends up getting checked out. Needed to have that removed. So
what's the lesson here?
Speak up.
No, the lesson here is if you point at someone and say, "Hey, that mole looks cancerous," maybe you'll get $10,000.
Yeah, I mean, it's a numbers game. You do that 100 times,
you could get 10 grand.
Yeah, but the lesson that I'm taking away is that speak up. If you see something that looks concerning, but you don't want to seem, what's the right word? Neurotic. You don't want to. Who cares? Just speak up. You'll be happier in the long run if you do.
If you see something, say something. All right, we're gonna bring our next guest.
Just say no.
We're gonna bring our next guest on in a couple of minutes here. Dave Rosa, he's the CEO of NeuroOne. They'll be followed by Robert Roy, 12:45, and Stefanie Johns from Hoth's Therapeutics at 1:30. Someone in chat, I forget who, I apologize, mentioned yes, Ford. Have we talked about a Ford yet? Ford. Is Ford at $30 yet?
No. Well, I was going to talk about, you were just saying how value's up, growth is down, but it's not.
Is Ford at 30? Oh, it's at 24. Oh my gosh.
Yeah. And I want to talk about too, how we can play some options with Ford right now.
You want to do it right now? Or you want to wait till after the segment, after the guest?
We've got 3 minutes.
We got 3 minutes.
So
all right.
What I want to do with Ford right now is kind of play a spread where I buy a call that's out there, maybe like $28 or so, and then sell some puts to raise some capital for those calls. And I think, I never like to just sell the puts outright because you set yourself up in a very dangerous position if the stock starts moving the wrong way. But with a stock like Ford, I would feel very comfortable selling like the $20 puts that expire, say like 6 months from now, saying, okay, if Ford does drop 25% down to that $20 level, that I can pick those 100 shares up at $20. And to me, I'm more than willing to pick those shares up at $20 for Ford right now.
Okay. All right. So do we have a potential setup here? I've got the chart up of the stock, but
yeah, I'm playing around with my options chain right now, so I'll let you know once I have something.
Hey, congratulations if you've owned Ford since like 2001 and you just got your money back. Seriously, if you bought Ford the summer of 01, you're in the black. You're back. It took you 20 and a half years, but you made it. You made it. So what's the all-time high in Ford? 30, 38? I think it's 38. I saw this morning. So
I think people understand the bullish side of Ford right now, but I just want to repeat it because I think it can't really be understated how tremendous pickup trucks in particular are for sales as automobiles in the United States. Like a ridiculous percentage of auto sales in the United States are pickup trucks.
Yeah. It's been that way for like a decade.
Right. And Ford will be the leader in electric pickup trucks, right? You have the Cybertruck, you have Rivian, but who's furthest along? Ford. Who's furthest along in putting out an all-electric pickup truck? It's Ford.
Okay. I'm with you. I agree with you. But can it also be true that the move for this stock is just ridiculous and totally unjustified for Ford?
From what move? You're saying going back to?
I mean, I'm really talking about since September, right? We've gone from we've doubled.
Yeah, I mean,
Ford has doubled.
We talk about the cyclical nature of the stock market, Spencer. That things are in favor until they become out of favor, and it's clear that Ford is still in favor. So, will there be a pullback? Probably. Do I think Ford will be trading higher in 3 years than it is now? Yes, I do. So again, we're talking about different ways you can play options with Ford. We can talk more about it after our next our interview, which is coming up right here in about 30 seconds. But I don't hate that, Spencer. If you say, okay, I want to get in the short term on the short side just to raise some money, if you're expecting a pullback, and then you're going to go ahead and then take those profits off playing the short side in the short term to then go long on the long term, I don't mind that at all. It's risky, but it makes I think it makes sense right here with where we're at.
If you're willing to stick to your guns and actually hold it, then yeah, but that's hard.
Also, thank you, Jay Rice. I misspoke earlier when I was talking about the spread. I wasn't talking about I was talking about doing a bullish debit spread. So I'd be selling a call, not selling puts and buying call. You're kind of if you're selling puts and buying calls, both of those sides of the trade are bullish.
Right.
Whoa. Oh, there we are. All right, Spencer. Well, we'll get back to Ford, but coming up right now, we've got NeuroOne CEO Dave Rosa. So if you guys are unfamiliar with this company, doing some very exciting things, kind of like a pacemaker, but for the brain. Well, I'll let Dave explain it because I'm sure he's got a better with words than I am.
That's my new thing. Is I like to explain things incorrectly and then have the person correct me.
That's what I was doing.
Yeah. So let's have Dave correct us. There he is.
Dave Rosa, how's it going? Thank you for taking time out of your busy Tuesday to join us.
Going well, guys. I was enjoying listening to the bantering back and forth.
Do you own a Ford, Dave?
I don't. So my parents, if they were alive, would have been close to 100. There was only one car, one brand that we ever owned, and it was a Buick. So if it wasn't Buick, it wasn't in our house. And since that time, I don't think I've never owned a U.S. car myself. It's either been Japanese or German.
Yeah, we were always a big Toyota family just because we're kind of not the biggest car people. So we want the lowest maintenance, still going to run 150,000 miles.
Sure. Actually, the best car I ever had was a Camry, but it wasn't like the old boxy look. It was the first year they came out with a much more roomier version, which I think was back in the 90s, like 1995, something like that.
All right, enough of the car talk.
Sure.
That's not why Dave is here.
Car
Dave,
Talk, that's a great show, by the way.
It was a great show. Dave, explain to us what NeuroOne is working on, and did Aaron explain it more or less correctly? Or?
Yeah, it's a pacemaker for the brain. No, I'm just kidding. So really, NeuroOne is a company that is really dedicated to designing what I would call next generation thin film electrode technology that has the potential to really offer much better imaging capabilities than existing technology, using more of a fully automated than manual process. And it's also got the ability, from what we've seen so far, to be able to perform multiple functions. And what I mean by that is not just the diagnostic part of the procedure, but also providing stimulation, which is the therapeutic part. or literally ablating the tissue. So the therapeutic devices have not yet been submitted to FDA for clearance, but the diagnostic ones have, and we do have 2 clearances for them. But literally what we're trying to do is transform the electrode industry for procedures really that I think you guys were alluding to, and that's stimulation in the brain for things like Parkinson's or epilepsy or other motor dysfunction. Or, I'm a guy who's had, probably at least 70 either injections or procedures in my back, most of them injections, obviously, but I've had 5, serious surgeries, and I still have residual nerve pain. And spinal cord stimulation, does have an indication, or spinal cord stim has an indication for chronic back pain due to failed back surgery. So someone like myself would also benefit from this technology.
So Dave, I was really interested when you guys reached out to us, because I actually, in my family, my little brother has epilepsy, and I've seen him kind of develop that really late, really. Like a lot of time people have epilepsy growing up. He never had a seizure until he was like 17. So, seeing that was really rough and stuff. And through his medical journey since then, I've kind of learned that even in today's, with all of today's medical advancements and whatnot, a lot of this neurological feedback and science is kind of not lacking, but it's just not as advanced as really I would have imagined. So, what do you see as the biggest developments coming in the next 10 years when it comes to neurological issues?
Yeah, I mean, look, we know that there's over 3 million people in the U.S. alone that have seizures that suffer with epilepsy, and a third of those patients are non-responsive to pharmacologic therapy. So, you're talking over 1 million patients that theoretically could benefit from a surgical procedure for epilepsy. But what's really held it back is the invasiveness of the procedure and the number of procedures required, to treat these patients. So, 10 years ago, what you would have to do is have the top part of your skull removed while you were awake. They would put electrodes on the surface of your brain, put that skull bone back in place, monitor you for up to 30 days, and then typically it's about a week, but then you would have to come back for some sort of resection. So once they identified the problematic area, you would have to come back for a second surgery. That's not really exciting for patients. And what we started seeing about 6-7 years ago is a less invasive way of doing the diagnostic procedures, where you would drill tiny holes. We're talking in terms of millimeters here into the brain, but you would insert these electrodes. They were thin, tiny tubes into the brain tissue itself, but you could leave the skull intact. And more people started to gravitate towards that procedure. But quite frankly, I don't know how many people would be excited to have, on average 15 holes drilled into, their brain. I mean, it's still a pretty, daunting procedure. So what we're trying to do is really eliminate one of those procedures by combining both the diagnostic and the ability to remove that tissue in one procedure. So to answer your question, really anything that's less invasive or that eliminates any additional procedures are going to be the things that are going to drive more patients into the hospital to actually have this done. So that's what I think will be the biggest changes. I don't see any new therapies on the horizon that are non-invasive, or I haven't heard of any that have the therapeutic effectiveness of actually putting a device in the brain to resect the tissue or even stimulate the tissue.
Got it. So is this idea that, you see sometimes that, okay, if these pills that you're trying to treat, whether it's epilepsy or even like a heart condition, you're trying to treat retroactively with the pharmaceuticals, with the pills, that there may be a more effective method through one of these therapeutic procedures as opposed to just the medicine right after? Is that is that well received, or is it kind of a debate among the medical community?
No, I don't think there's any debate. I think I think the argument that you would hear from neurologists and neurosurgeons is that epilepsy surgery is one of the most underutilized, if not the most effective therapy to treat epilepsy. So, the patients that go through an invasive diagnostic procedure have already been through typically 3 different types of medications to prevent epilepsy, and a patient would never go to the invasive part of the procedure unless they would have failed. So with my back pain, I actually tried all 3 classes of these drugs, and the first class did nothing. The other 2 I had reactions to. I had a severe spike in my blood pressure, and then the other one caused severe pain, just facial pain. So that's the other issue for patients, is that, many of these drugs, at least the older drugs, had side effects. The newer drugs that you'll hear doctors talk about are no more efficacious than the older, more established drugs. The only difference is they have less of those side effects, but there's no improved efficacy. So, the hope is that more of these patients will take advantage of the therapy. Some of the pushback too, you can imagine, are half the population kind of goes back to your relative. They're either adolescents or infants. And how many parents want to sign, their child up for a procedure where they're going to have holes drilled into their brain, or, a device, implanted at that young an age?
Right. Yeah, and I mean, I think that idea that we've just seen a lot of medicines on the pharmaceutical side be kind of, the same for 10, 20 years, like you said. But getting back to NeuroOne as a whole, so you mentioned about 3 million epilepsy patients that could be that's that market. So including Parkinson's now into the fold, and other diseases, what's the total market opportunity for NeuroOne here?
I mean, if you included all the potential markets for our electrodes, I mean, it'd be over $5 billion, because these electrodes could be used in urological procedures for patients that have different types of incontinence, pain. Stimulation is obviously treated or used to treat pain, hypertension, and then you mentioned the neurological issues, epilepsy, back pain. I mean, back pain is the #1 business today for any of these electrodes that are used in any of these systems. It's from what we've seen in market research, $3 billion alone, just for that one. And then Parkinson's is about $500 million in the U.S. and growing.
Got it. So Dave, you mentioned earlier that the actual therapeutic devices are not submitted to the FDA yet. Do you have a timeline on that? And if not, what is the next kind of catalyst you foresee for investors?
Yeah, so we have a couple catalysts that are upcoming. One is we have a submission into the FDA for use of one of our diagnostic electrodes for up to 30 days, and we're waiting to hear back from FDA on that. And we expect to hear something this month, although there's no guarantee to that. And then, what really unlocks the door for NeuroOne is the ability to use our electrodes in these therapeutic cases. And so we've actually been testing our electrodes at the stimulation parameters that you would expect to see for spinal cord stimulation, but to be used as an implant, as a therapeutic implant, as opposed to just diagnostic purposes. And once we can demonstrate that these electrodes will last for years, it really opens up all these other opportunities for the company. But the one that we're most focused on now is spinal cord stimulation, because it is the largest market. And we do have the ability to be able to provide a full system, not just the electrode, but gain access to hardware that we could pair with that. So instead of just being able to offer an electrode, our goal is to be able to offer the entire system. So the market will be hearing about the results of those tests in the first quarter of this year.
Got it. Well, yeah, if I were a shareholder, I'd be happy to hear that y'all are attacking the one with the biggest market. And then obviously selfishly, I hope down the road, we get that essentially cure for epilepsy. So I don't have to worry about my little brother having seizures anymore. But I understand that's probably pretty far down the road.
Yeah. So exciting times for us, and we expect a lot to happen this quarter.
Awesome. Well, Dave, thank you for hopping on the show today. It was a pleasure to have you. We look forward to having you back. Anytime you got news or anything coming out, let us know, and we'll have you back for an update.
Always great talking to you guys. Thanks so much for the opportunity, and Happy New Year.
Happy New Year to
you as well.
Hey, should we do a crypto update? We have not done one yet today. You guys want to look at some cryptos?
Crypto update. Let's do it, Spencer.
The heat map has spoken, and it says, I don't know. I don't really know what it says. It says that we're mixed, right? It says Bitcoin. Actually, look at Ethereum. Look at Ethereum and the outperformance compared to Bitcoin, Binance Coin, Solana, Cardano, right? I mean, Ethereum's up 2.38% today, dramatically higher than everyone else.
Wait, sorry, not to interrupt you. BNZNB Trading, is that a typo, or did you have a Dodge truck that really had 1 billion miles on it?
No, that's not real.
A million? I'd believe 1 million.
No,
like diesels run forever.
1 billion miles? Come on, man.
I don't know. Maybe he's saying like the all-time record.
Wait. Maybe it's not miles.
Oh,
maybe it's
meters?
something. Maybe it's like
feet.
Wait,
inches.
I don't know the mile to kilometer conversion.
I don't know. This is going off the rails though. Back to the heat map, Spencer. That's the first thing that popped out to me was, wow, look at how much more Ethereum's kind of outperforming Bitcoin right now. Ethereum up more than 2%, while Bitcoin is not even up more than 0.5%. Jakrita, this is where the Hoth exec will be talking in about 1 hour from now. Exactly.
1 hour, Jakrita.
Exactly 1 hour. Okay, I think BNBZ Trading was trying to say 1 mil, not a bill. So I think that's believable. A diesel truck can easily run 1 mil, but a bill, probably not. Yeah, I mean, Dogecoin pretty flat. Dogecoin down to 17 cents. I gotta say it. If I'm Dogecoin's family right now, I'm purchasing Dogecoin a coffin.
Oh, really? Wow.
Yeah.
Wait, and we're at 17 cents.
Yeah, but there hasn't been any light. I mean, there was like one day.
No, there was like that week, like it was like a month ago.
Yeah, where it like went from like 20 cents to like 23 cents.
Yeah, yeah. It'll probably happen again.
But Dogecoin needs, like with Dogecoin, it's all about the hype, right? And for the hype, you need like 5, 10, 15% days.
You're right.
And we're missing that right now. We're missing it.
Well, you know what's funny is they're actually where is the hype right now, Aaron? This is an interesting question. Where is the hype?
NFTs.
Is it though?
I don't know.
I mean, it definitely was. NFTs are still hot to a degree. Are they as hot now as they were 3, 2, even 1 month ago? I'm not so sure. The hype is not in Dogecoin. It's not in AMC, right? I mean, yes, there are degrees of hype everywhere, but I'm saying, like, is there a single
Ford?
Is there? Oh, good answer. Is there a single thing is there a single market where the hype is concentrated now? I would say Ford is not a bad play right there. Not a bad guess. But no, the hype right now is spread out. The hype needs to converge somewhere.
Shelly's saying the hype is dead everywhere. Everyone's broke.
Everyone's broke, but we're at record highs and stuff. I'm just kidding.
I know
some people. Anyway, hey, if you want some free Bitcoin, whether or not Bitcoin is down or up or sideways, you can get some Bitcoin for free. All you have to do is download the Voyager app, enter their offer code ZING, ZING, fund your account with $100, make a trade, and then they'll give you your Bitcoin right there in your account. Check it out.
I see y'all in the chat talking about Hive. Maybe we'll get Mr. Frank Holmes on the show soon to talk about what's going on with Hive.
Hive, we can get Frank on. How is Hive blockchain doing? I'm sure it trades with Bitcoin. I didn't see if there were news today, but
I thought Hive was more of an Ethereum play now.
I think it's both. I'll be honest, I don't remember. Yeah, Shelly, isn't that the catch-22, right? All-time highs, but breadth is shit. Market breadth, and it's been bad. This is like it's literally just like every day is the same thing. Like market breadth, market internals are bad. Indexes go higher. Frankly, it's kind of impressive actually. And the thinking there is like, you could argue that the worst is over, or you can argue that the worst has yet to come, because like the worst is over argument is like all these tech stocks just got, or not all the techs, every tech stock that's not, the FANG stock just got destroyed last year, right? They already had the correction. They already had the correction. Now they're going to come back.
I've got a little.
The other side is like, just wait till the FANG stocks crash, and then we're all doomed. So I don't know.
I've got a little swing trade idea.
For right now.
Yeah.
Okay, my phone will not stop with the Palantir price alerts. See, this is a great lesson in like psychology right now, right? I bought. It's playing out like inside my mind. I bought Palantir 2 weeks ago, right? With the idea to play it for like a January bounce. Let me get my chart up on the screen so we can look at it. And I was very clear with myself. I had a defined exit. My defined exit. Oh shoot, that's not good. My defined exit is basically right here. Right? This is a daily chart. Let's zoom in. This is a daily. Let's go to a weekly. I mean, my defined out was falling below these recent lows, the series of lows here. In this case, I think the low was 1784. Right? I think that was the low from the other week, 1784. And that's it. And that's what I'm going to do. Right? And is there a part of me right now that is saying, oh no, but Spencer, just hold. No, if it falls below, and I'll give myself like some room. I'll give myself like a dime. So call it 1775 or whatever. But if it falls below that, like falls to that, I'm gonna get out. And that's the trade. And it'll be a loser, but that's the trade. I think I'm in from like 18. I don't know what I'm in from, 18 something, right? So a small loser, but a loser nonetheless. And that's how you avoid holding the bag right there. And I'm having this internal battle with myself right now. There's like 1% of me that wants to hold.
All right, you ready for my swing trade?
Yes, I'm ready for your swing trade. Go.
All right, I'm gonna do it right now so no one can front run me.
Do you think anyone's gonna? Maybe, I don't know. Anyway, while he's doing that, I should probably look up what my cost basis is in Palantir. Stop with the.
All right, I'm in. I can talk about it now.
You're in. Okay.
All right. So, Spencer, what do we know that's going on right now in the United States? Well, the world really, but in the United States too.
The Olympics.
No,
coming up.
No.
COVID.
COVID, yeah.
Okay. I wasn't sure if that was a trick question.
No, and
right.
so here's the thing: is sometimes I feel like in my trading, I overthink things. If you ever heard the acronym KISS, KISS.
Yeah, keep it simple, stupid.
Yeah, keep it simple, stupid. That's what I'm doing here with this trade. Let me share my screen. Abbott. This is the company that's making all the at-home COVID tests. We just saw 1 million COVID tests, or 1 million COVID cases in the United States yesterday. Of course, a lot of that's coming from a holiday backlog. Roy's saying war. No, I don't think we're in a war yet, but when the time comes, there will be a way to play that in the stock market, and we will talk about it. So stay tuned here on Benzinga. But Abbott, I'm basically saying I think we're, look, it's down 3.5% the past week. It doesn't make sense to me. I think we're going to see a little bounce as we see the demand, right, for COVID case tests.
It's already happened though. Like the demand is here. Didn't Abbott destroy a factory?
That was back when COVID was done though, and then COVID came back, and so now they're making more tests, selling more tests.
Okay, but it's not that easy to just like spin up a factory. You know what I mean? Like, didn't they?
Abbott's got they've got the capacity to just make some tests.
But this was the company that destroyed a facility, a testing facility, like a a facility where they manufacture tests, right?
I
That
don't
was
think they
that.
destroyed the facility. I think they just destroyed a bunch.
That's what I meant. Okay. I didn't mean they burned the building down.
Right. They burnt. They destroyed a lot of tests.
Okay.
Yeah. Okay. Thank you, Kendrick Duke. Go to Walgreens. Go to CVS. Try to buy an at-home COVID test. You can't.
Yeah, you're right.
What does that tell you? That tells you that every single test that Abbott produces right now will be sold. Maybe that won't be reflected until the next quarter earnings or whenever that is. But my thesis, my hunch here is that Wall Street investors will realize there's no reason for Abbott to be trading down right now. We should go buy some at 135 because they're going to keep continuing to sell a lot of tests, a lot of equipment over the next.
Can you on the chart there? Can you look up Abbott? I want to see Abbott since November.
Since November.
Yeah, just this past November. Can you just show me where that is?
Yeah. I can. Let's do this. I'll expand the chart.
I'll pull it up on mine. I just want to see something.
All right. We're looking at.
I just want to see. Okay, so Abbott. So, and the reason I ask, I'm asking specifically about after Thanksgiving. The end of November.
Keith, Hoth is coming on at 1:30.
It's in the description, by the way.
50 minutes. 50 minutes.
Okay. I want to see what Abbott has done since Omicron became a thing. That Omicron became a thing like the day after Thanksgiving. It was November 26th, right? It's already had a run though. So that's my point. Abbott's already had this run. This Omicron induced run where everyone is gonna get this thing and want to get need to get tested, right? It's already gone from what 127.
See, I hear you, Spencer.
Yeah,
and that was part of my thought process. And then I went back to the KISS acronym, and I'm like, look, I also think what we should talk about. I feel like there's been a shift in the norm. Like with the first COVID waves, it was about like going to a testing site and getting tested. Now it's just about finding somewhere that has an at-home test. It makes more sense to test yourself at home than it does to go sit in a waiting room somewhere or sit in line with a bunch of other people that may be sick.
So when I did it, I can only speak to my experience. I never when I like thought I had COVID and I did, I didn't do an at-home test. I went to two different facilities. Now this was months ago before Omicron when like you could do that. And I got two tests because I thought that they would be more accurate. Two of like the stick, the whatever, the PCRs. But if what we're seeing is like A, you can't even buy a test, and B, you can't even like get tested at all, right? Paces they're not even like testing because what even is the point? So I'm not really sure what you do right now.
All right, well, how about we do a
but I guess I was just saying like Abbott already had this run, so I don't know how much more is already in it, but like who's to say people just like stop getting tested and just like assume they have it, and then a test doesn't really do anything, right? It just like confirms or denies. But what if you're sick? Just stay home anyway. So what like, there's nothing to do for it. I don't know. I don't know if I see it.
Let's lunch bet.
Okay.
We're at 135 right now, 135.42.
Yeah.
Let's say a week from now, because this is like a short-term swing trade. I think in the next week, we're going to see some money coming back into Abbott.
Okay. So 135, and we're going until January
11th.
Oh, so a week from today, January. Okay.
Okay, we can go. We can do a week from tomorrow.
I'm okay with that.
All right.
I'm okay with that. January 11th, and by the close.
Yes.
Right?
Yeah.
Well, give me a number here. Let's pull up a chart. Give me like a number here.
Caveat: if the overall market is down, then it doesn't count because.
Get out of here.
I'm kidding.
Get out of here. Okay.
It's just saying Abbott tests don't work. I don't think that's true. I don't.
Okay.
Think
135 is where we're at right now. 135.50.
50. Yeah.
Okay.
So how about if it's above 136, I win. If it's below 135, you win. If it's somewhere in the middle, it's a push.
Oh, you just literally straight up. I thought we were gonna go a little wider.
What do you mean?
You want to go a little wider? I thought you wanted to go like, I don't know, like 140 to 130. Like above 140, below 130. In the middle is a push.
In the middle is a push. Okay. I mean, okay. I'm fine with that.
All right. Above 140, he wins. Below 130, I win. If it's in that range, it's a push. Good deal.
All right.
All right.
Bet. Lunch bet.
Bet he just said. Anyway, back to more pressing matters. Can we make note of this somewhere so we don't forget?
The bet?
Like put it in the doc. Can you
All
put it
right.
in the doc so we don't forget, because we will forget.
No, Shelly will remember.
On to
this.
more pressing matters, i.e. my Palantir trade. For those interested, my cost basis on Palantir is 1790. Wait, is that right? Yeah, it is. 1797 is apparently my cost basis.
Oh, so you're in the green right now. It's 1798 right now.
That's crazy. I didn't realize that.
We're pushing what, Christian? All right.
So I'm at my cost basis in Palantir, and
Right
I'm
now.
holding until 1775, and then I'm out. It's that simple. Keep it simple.
So I like trading Palantir because it's a good stock to trade, and it oftentimes on its chart like establishes like good levels. It looks like it's found some consolidation, some support here. But I'm kind of bearish Palantir long term. You want to know one of my reasons why?
Yeah.
Because the company a few months ago, they put out a headline that Palantir bought like $50 million worth of gold.
Yeah, I remember that.
Do you know what that tells me?
That they're preparing for the end of the world.
Well, sure. So, okay. So it'll profit. So Palantir will be in a better position than other companies if the dollar collapses. But that tells me that Palantir has nothing going on within its company that it has a better use for than $50 million. I'll tell you right now, Spencer, if
they could have given it to you and me, would that have been a better use of the money?
Well, maybe not for Palantir, but I'm saying let's put it in perspective to what we know with Benzinga.
Yeah, okay.
If Benzinga, if we were written a blank check, is
that on our end?
Yeah. I don't know if they can hear it. I don't think they can. Rohan, we're getting Michael Murray in our ears.
I don't know if you're in the chat right now, if you can hear what we hear, holler at us. I don't think you can, but we're getting some random ambient noise in our ears right now.
Michael Murray.
We got someone talking in our ear right now. All right.
But what I was going to say is if we get a blank check for $50 million, there are improvements we could make within the company, people we could hire, things we could do with that money.
I would fire so many people
to further our mission. So to me, to see a company not want to put that money, the cash they have on the balance sheet, and reinvest it back into its company, I mean, that's a big red flag to me.
All right. Okay. He doesn't like gold. Today I learned. But Aaron Bree.
Well, it's not even that. I mean, if they would have said, "Oh, we're keeping this $50 million in cash for safekeeping," it's like, all right, like you don't have anything that you think you can further your company with without the.
I don't know. I don't know, man. Gold is an investment. It's a store of value. That's what they tell me.
If we did get that blank check for $50 million, I'd want to allocate at least like $2 million of it to some YOLO trade. I think that'd be fun.
Yeah, if Benzinga got 50 mil, which we just got more than that actually. I don't know why we're hypothesizing. We just did get
but it's different then. It's not like it's like blank check. Like do whatever you want.
Yeah, it's true. They did not give us a blank check. Anyway, let's bring on Benzinga Live's blank check, Robert Roy, and let's go through some option subs with Rob, see what he's doing, what he's not doing.
By the way, that's a Warren Buffett tenet, like companies that reinvest their profits back into the company.
Yeah,
he likes that.
Yeah, that's what you're supposed to do.
AB and WB, we're one and the same.
All right, Rob Roy, what's up, man?
How we doing, guys?
Doing fantastic. Happy New Year.
Happy New Year.
Same to you. How we doing? How was your New Year's? I imagine it was low key like everyone else's, right?
Pretty much. Yeah, we just we were able to stay up and watch the ball drop. It's always an accomplishment these days. But hey,
staying up past midnight ain't as easy as it used to, and we're young, but it's easy. Anyway,
you're 24 and 27 and they pass out, so I'm not worried about it. That I'm going to sleep earlier than that.
I hear you.
But for the one day a year, we do it. But
Rob, what is on your mind today?
So I've got my screen shared there with you. Let's go take a look first at the S&P 500. Kind of a measured move of what happened today in the market. So let me get a little bit more in there. So this is today's candle right here. We made this nice push up on the gap. We had a strong pre-market, as you guys know. We had a nice run and we failed. It was not surprising, and I talked about this in my show this morning with my students. It was not surprising to see that fail off of that 48.0893 level. We tagged it, and that was the goal, is to hit it. Can we get above new all-time high and then pull back, right? Which is exactly what we've done. Doesn't put us in any kind of bearish position. It smacked me a little bit on, I was in an NVIDIA trade. We'll leave it at that. I had bought a call. We'll leave it at that. I had bought a call. It wasn't bad. It wasn't that expensive. The call was 10 or 12 bucks or something like that. I bought a call option on it, got out of it fairly quickly as we broke to the downside, but it's just indicative of what's happened with everything out there today, right? So many of the stocks have pulled back, the S&P pushing back up and pulling down. Call it Omicron, call it whatever you want, that's causing it. We're just near these all-time highs, and the market's going to just play around with it. I have seen this for decades, where it keeps playing and pulls back before it finally breaks through. You know, we had this high here, we pushed up.
That was from when? I'm sorry, this is from November.
Yeah, so that is November 5th was the high. That's what I've got my Fibonacci drawn off of.
Okay.
We got that pullback in there. We attempted again on November 16th. We pushed and attempted again on the 19th. We head fake. We failed on the 22nd. And it took all the way until December 23rd before we truly broke it. And showed any kind of positiveness where we actually closed above. All of these traders that are trying to get in early as it's approaching, or, it pushed above. I'm not that type of trader. It doesn't mean it's bad. It just doesn't work for me. You got smacked a couple of times. For me, I'll wait for the push up and either a retest or a small move to the upside, and there's the entry. So we're doing the same thing now is what I'm getting at, right? Okay. We had great gains in 2021. On the S&P, on all the markets, and all the exchanges. I think we're going to have another bullish year. I just don't think we're going to see the same double and triple digits that we did on some of the exchanges out there. I think we'll see nice gains, but just not as big as we had. I think there'll be a little bit more fight for it. And yet I have some of my students that argue with me that say, well, let's see who wins the midterm elections. That may have something to play into it also. But up till that point, probably not going to see that 20 and 30% gains.
Rob, what do you make? I mean, I know the trading year was 2 days old, but like, what do you make of just the continuation of the trend of last year, which is indexes go higher and market breadth is garbage, like just straight garbage, just like so many stocks just continuing to go down.
Exactly. So it's very selective of what's happening out there. There are very few companies that are driving things, and we see so much of it in the opposite direction. Let's see here. I do another update this evening. So this was over the weekend. I've got 20 stocks that I analyze a couple times a week for some of the groups of students in something called Power Option Plays. And I give it one of 5 biases. 2 of them have a bullish nature, 2 of them are a bearish nature, and then there's neutral. So we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 of those stocks. So 50% had a bullish bias. 2 of them had a neutral bias, which means 8 of them had a bearish bias. So what is that telling me? We don't have a good, clear direction. And look at where the S&P 500 is, near all-time highs. So it's just, I think it comes down to finding candidates that have very clear paths to them. What I utilize, the phrase I use is a clear and concise entry. So clear, meaning that's the path from where we are to where we're going. Is there anything in our way? A short-term resistance, a moving average, a Bollinger Band, anything? Is there something above our head or below that is going to block us? So that's clear. Concise is the entry. That is finding the right entry. To me, the entry would be, this is messy. This all-time high, this fib level here, that's messy to find a concise entry. I could break above this fib line and fail and wind up back below that all-time high we had put in a few days ago just because of retesting it again. So I want to find positions that are setting up with a clear reasoning for what we do. Today was perfect, and I missed it, but today was perfect on Amgen. We had closed up here on Amgen on Friday, which was closing price was 226.69. We opened up today at 225.76, and we stretched down. We have a confluence of our 8 moving average and we got a bounce. That was a concise entry with a clear path and nothing in my way to get to my resistance level. So 225 to 231. We're not knocking down any doors, but it's a $200 stock. So you're moving $5 or $6 in there as a potential. We've been there before, so I'm not concerned that we can't do it. So the opportunity is there, without a doubt. It's finding the right candidates, though, Spencer. And I think too many traders are chasing after the wrong companies. Everybody's trying to get ahead of the game. It's the Reddit type theorem of let's go after the GameStops and the AMC. They're the big movers, but they may not be on the day you choose them, right? So it's finding the right place to take that entry.
All right. I mean, how many people? Amgen is a widely traded stock, but it is not exactly as what I would call a sexy name. So maybe that's part of the problem right there. But it is pretty widely traded. So
very possibly, I'm just using as an example.
Yeah.
Of Amgen, we've got Booking, which is setting up as a bearish entry, right? And I'll talk about some of these in a moment. But I guess it really just comes down to. Let me see if I can pull this up real quick. I'm just working on this today, so hopefully, okay, should be that one right there. So what monitor?
And I also would like to move on to. Oh wait, this is Baba now. Okay,
now I just pulled it up as an example.
Now we're getting somewhere.
Okay. All right.
Amgen's fine, but it puts me to sleep. No offense to Amgen, but Baba, now we're getting somewhere fun.
So just as an FYI, last year on Amgen, $7,566 what we made on Amgen last year. So I can be bored and make $7,500. But we did a little bit better on Baba. We made over 18 grand last year on Baba.
Let's talk about it.
I like Baba a lot.
First, let's talk about how you traded it last year, and then we'll talk and the setups, and then we'll go into right now.
The setups there are two types of setups that we primarily trade on these 20 stocks that you're looking at right here, Spencer. There's two particular setups. We have a day trading setup and we have an end of day setup, a swing trade. Most of our trades in the last year and a half have shifted over to more day trade from swing. You go back 2 years ago and the majority of our trades were swing trades. The day trades were kind of the extra that we added in. And we've done extremely well on them. And the shift this year was very important. We found one of our students tracks every trade that we call out on these 20 stocks. And he found in the first couple of months that had he taken every single day trade that presented itself that we called out versus every swing trade that we called out, he lost $1,000 on the swing trades and made $40,000 on the day trades, right? So 2 patterns is what we're looking for. You want me to kind of go through a little bit what?
Yeah, yes, I do.
All right. I'm going to take you back to boring for a second, all right? Which is Amgen.
Okay.
All right, let me go ahead and get rid of that line. Okay. So the very first thing is I've got 3 moving averages on there, Spencer. I've got an 8, a 21, and a 55. 8 is the pink, 21 is the green, 55 is the brown. They are all in the right order. That means they are in a true bullish bias, meaning I can take a directional trade that will carry a larger number of contracts, meaning upwards of 10 contracts, what we tend to trade there. If my bias was not true bull, I would only be able to take a maximum of 4. But I've got true bullish. The 8's above the 21, the 21's above the 55. Life is good, right? I've talked about this before in here with you guys about the positions of the chair, right? I'm sitting back with my hands behind my head, right? And here, where we are, the last day on the right of the chart, I'd be back here, position number 1 in the chair. Not really a whole lot happening there, right? I can't reach the keyboard and nothing I'm placing a trade on. Now I would kind of be sitting up saying, all right, what's happening in there? We're just kind of getting ready, right? We push higher. We break above. Now I'm kind of at the edge of the chair. I'm looking for what's going on here. Do we have an opportunity setting up? And then what happened? We retested this fib line right here, and we bounced. That was a potential bullish entry into the trade for us. By waiting for the setup, are we going to miss out on some? Without a doubt. Without a doubt. We did I'm looking at the numbers, 419 trades last year. So did we miss out on some? Yeah, probably 400 more we could have taken.
Wait. Was that was overall? Okay, just making sure.
Overall.
Yeah.
Overall, correct. It all depends on the company, right? Amazon, we did 35 trades last year. Apple, we did 8, right?
Right.
Square, we did 7. Tesla, we did 9 on Tesla.
Got it.
Right?
Got it.
Just depends the company. So I'm looking for that clear and concise entry to take the trade, right? If I don't have it, so the concise, I was at a good point. If we failed, I've got a very tight stop in here. If we break out, I've got a clear path to my resistance. So I give myself minimal risk in my trade setup. Now you could do this on Amgen, on Baba, on Amazon. You could do it on Ford. It doesn't matter. You can make the exact same setups the exact same way, right? We pushed higher, we pulled back, and we got that same setup again today, right? We had pushed up, retested, and bounced. There is an entry. And what is it costing you on an Amgen for a day trade? It's minimal. I mean, there's not a lot of cash required for an Amgen or a Baba or some of these other companies. I mean, when we look at the option chain, I've got a 73 delta, 197 open interest. So it's 65 to 85 delta is the rule. 100 plus on the open interest. Day trade, we're looking at front week. What it literally could be Friday afternoon at 3:30. I'm going to trade that Friday's option. I've got a 73 delta, the 225 call, and I'm going to pay $3.45 for it. Decent bid ask spread, nothing crazy. So 345 would be our mid price. So it's not like we're spending a lot of money. It's a whole different ball game if you're going after a booking, right? And trying to trade that one. It's a little more expensive, without a doubt. You also don't have the open interest. But 65 delta, we're looking at 43 by 52. So we've got $9 underwater when you hit enter. Right? So Amgen's bookings, Babas and such, not really much there. So that's, as far as swing trade goes, Spencer, that's exactly what we're looking for. But the reasoning behind that swing trade is the setup is there. I've got a confluence of my 8 moving average here, which I did not have back here. I didn't have here when we were first looking at it. My 8 has a confluence with that fib line. We got to bounce. There's the entry. We do the same thing for day trades, but we're going to do it in a situation that we're not as comfortable in the overall marketplace. Right now, every candidate on my list, except for one, is either earnings coming up in the next 21 days, or we list it as a day trade. We have nothing that we're setting up as swing trades. PayPal was the only one, and that was before the announcement came out the other day and they gapped up. We had them down as a bearish trade.
Okay. I'm down with all that.
Does that kind of answer it? Did I blow you away? Too much information or
no. I think that was good. So just to recap here, and I see tickers in the chat. I promise we will get Rob's thoughts on whatever tickers you guys want. I saw someone asked about Square. We can do that. We will save time in a few minutes for that.
Sure.
So just there, the right hand side. Oh, look at that. Square is actually on your list. I didn't realize that.
Absolutely.
So why don't we just pull? I didn't realize Square was so why don't we just pull Square up because it's on your list. Yeah, okay. So Square.
All right. So Square. First thing, guys, I'm going to go through this and analyze it just like I do for my students in what we call our power option plays program. First thing I do is I look at where the fibs are at and what's going on. So I've got a drawing tool open over here. So we've got this great Fibonacci right in here, right? V bottom, V top, right? The start of the fibs, the finish of the fibs, okay? We have our 100-point level in there. That's this dot dash line. It's at 200. And it gives us a confluence, which is that blue zone. If you read the book, The China Study, you'll understand what blue zones are. It's health zones around the world. It gives us a health zone in there. It's an area of strength is what it comes down to, okay? The moving averages are in the right order. So we're in a bearish bias. And they're spreading apart. So I like that very much. Overall pushing to the downside. Now we've played with this Fibit, this negative 136, not a standard fib number. We've played with that Fibit multiple times. We pushed through, we came back. We pushed through, we came back. We pushed through, we came back. We did it again today. The difference today is we were much closer with our moving average than we had been prior. So we had more of that confluence taking place there. If we find, and I'm going to write this down, 161.13. I want to go back and look at the 5-minute chart on Square, and I'll make it full screen. And let's go snap a line at 161.13. Come on, 161.13. All right. So, perfect. So what happened? I'm sorry, grabbing the drawing tool. Apologies. So we came down and we closed right here. We did not break it, right? And we got a quick little bounce. Now, would you have been okay if you took the bearish entry there? Yes, you would have. But now you're sitting here saying, all right, now is where all the double talk comes in. Is it going to go up? Did I make a mistake? Should I pull the trigger and just get out? I know it's only 20 cents I'm underwater, but if I do it now, now it's 25 cents, right? Wait for the right entry. What was the right entry? We broke 161.13. We closed below. We retested it and failed. That right there is the right entry into Square. Taking a bearish trade off of that move, right? You can see we moved from 160 down to 152. You probably are not capturing all of it, right? But what method could you use as an exit? Well, how about until it closes back above an 8 moving average, I'm going to stay in the trade. So right here. Or you can give it a second candle if you wanted to as a close above, right? You can say, nope, I'm out of the market by 11:45. I don't want to play that game with lunchtime when we just go sideways and get out. It gave us a great opportunity on that position. You know, the entry is, let's call it 160, just for kicks and giggles. If you use the moving average close, you're getting out at 150. Again, we'll call it 154. You have a $6 move in there with a 70 delta. That's $4, 4 and change that your option is increasing in value, all for the day, on an option that you would have spent, $12 or so, $10. But Square, as the move today, was perfect. So now what does that do for us tomorrow? Well, look where we are. If we close right here now, Spencer, what happens? Well, we're not near moving average. I have no confluence. I had a very strong move with a candle that is much larger than my average candle has been. So now I've got to wonder, are we going to start to see some retracement back up, even if it's false, but a small move back up before we push back down?
So you would wait. The short answer is, if you were to take a trade here, it would be on the downside, but you would wait.
I would wait for at least, now today, Spencer, if we can get a close below this red line, which is our 272 fib line, 151.51, strange number. If I can get a close below there, I retest tomorrow and fail. I would take it as an aggressive trade tomorrow, meaning I would do 4 contracts, not 10. On the entry for this, because I also have a smaller potential tomorrow than I had today.
Is there any scenario here? Cool in the chat. I'm not sure which side or which bias you have here, but Rob, is there any scenario here where you would consider a Square for a long? Like, what would have to happen on the chart?
So for me to take Square a long position, I will share with you what I need. The 8 needs to be on top. The 21 needs to be here. Actually, I would be okay if this happened, if the 55 was not on top, but I mean on the bottom. I need the 8 at minimum to be on top. The 55 can be in the middle. And the 21, I'm okay with it if it's on the bottom. But by doing this, I need to take an aggressive trade, which means 4 contracts is my maximum. My normal trade would be 10 contracts on a company like Square.
Okay.
So, and that's all because my moving averages are not in the right order. It's not 8, 21, and 55. If I can get that, I'll take 10 contracts. But I don't take bounces off of here, Spencer, unless I'm trying to catch a.
Wait, I'm just trying to I'm getting okay. So just to simplify it, so you would consider a long. I'm sorry, at 190. Did you say 198?
No. So I just drew moving averages on there.
Right.
I extended out the moving averages. So right now, if my moving averages flip, I would consider a bullish trade. but I'm going to miss all of this move up in here before those moving averages shift over.
Okay, yeah, and that's at 197, or well, I guess.
Well, I don't know.
Yeah, that's true.
How long do we go sideways where all of our moving averages start to go sideways, and it takes that much longer to catch up?
That's true. Okay. Okay.
So,
He would wait. He would wait for his two moving averages to for the shorter duration one to cross above the longer duration one.
Correct.
And that would be his signal to buy.
Correct.
I don't know if that's what you're looking for, cool, but that is how he would play it. Webcoin wants your take on Vroom for a swing, VRM.
All right, VRM. Let's do
Vroom.
Well, it's been swinging, just down. Who is this? I don't know. So not really sure. All right, so newer position. I see nothing on this that excites me whatsoever. If we had this sideways pattern take place here, that large candle broke through with a vengeance of it, and we've had to move down. This would be the same scenario. On Vroom, we would need the moving averages to shift, get me 8 back above. So we would have to get higher than that 15.5 level with our 8 moving average before I would even consider a bullish entry. And then from there, I'd have to look at look left, right? Where is my resistance is. So in other words, let's say that we moved up with our moving average. We got up here, and this is our 55 is there. 21 is still in the middle. And the stock right now is sitting right here. Well, if I look left and I say I've got this strong resistance here, do I really want to take that trade with that small movement in there? So I don't see anything in it personally that I would look to take as a swing on it, unless we got a major news announcement. There's a buyout, an infusion of cash, something that would say this is going to change direction. I'm not interested in taking a trade on it at this point. And bearish, I'm really not interested because there's not a lot of room to go. You got 11 bucks before you hit zero.
Patrick Starr asked in all caps, "Can you check on Visa?" Sure, let's look at Visa. Well, it's a financial. Actually, I have not looked at Visa today. I was gonna guess it was maybe higher.
It is. MasterCard took a nice little move up today also. Let's see. So I need to redraw the fibs. Let me back these out of the way. Let me get into a bigger picture here so you guys can see it a little bit better at home. And always remember, you could full screen this, guys, and see it bigger on the chart. All right. So we've got a nice bullish move on it. We broke above the 272 yesterday, which is at 272, negative 272. It's called hesitation. Jot that down if you don't know it, right? It's a hesitation candle. Doesn't mean we're going to stop. Doesn't mean we're going to reverse. It just means that we tend to slow down at that point. Yesterday, we pushed right through it, right? We gapped up today, and we made a nice run. So my moving averages as of today, Spencer, my 21 is just crossing back up through the 55. So the opportunity to take a full swing trade is there. But what I would want to see happen is this. I would want to see my position move back down near that 221 level and close near it. And I'd want to see my moving average, my 8, at least be at that 219-ish level at a minimum. And then take the bounce from there. You've got 223.5 as your first target, and target 2 is 229. And then when I say target, those are resistances. So you're going to get out somewhere down below that level. You're not getting out at the target. You're getting out somewhere below there. But, trading is, to me, I guess, Spencer, the best way I could explain this, trading is not about what do I do right this second to take it because I want to take a trade on this now.
Yeah.
It really comes down to, Mr. Miyagi, patience, right? Best block, no be there, right? Love the Karate Kid stuff. So we've got to have patience in this setup, and it's not there. Now, could you take a breakout and retest on that 223.48 and a bounce? Yes, but I would take it as an aggressive entry. I would take a smaller number of contracts. So get me up a little bit higher, maybe 224.05 on the close, retest the 223.5 and bounce. I could take an entry, but I would do it as a small number of contracts just to kind of step my way into the trade.
All right, we got time for like a couple more guys. So let's look at Mike wants to know if you would take a call. Would you buy calls in Apple? Wait, is that by the end of the month or for the end of the month? It says by the end of the month. I'm not sure. But that's what it says. I'll bring it up on the screen.
All right.
For Apple.
So everything we've just talked about, Mike, and for everybody, look what's happened. We pushed up to the all-time highs here and we failed. We came back and we broke our head above yesterday, and traders went, ooh, jump in because it's time to go long. We got above the high, and then it failed. Right? Today we opened up and stretched up. People jumped in again and we failed. We don't have a good structure yet to say take a bullish entry. But Mike, if we can get the move, and close above that 182.13 level, retested and bounce, you've got 188.75 and 191.5 are the two targets there. And if we look, what I would be doing on Apple, Mike, is I would not be buying something for the end of this month. I would make sure to buy something that has at least 30 days of time on that position if we're looking to hold it more than just a day trade. So I've got 31 days, which is the February 4th for 22. I've got a 67 delta, 68 delta, 306 open interest. They both work. That's the 172 half call, again, based on today's numbers. The 172 and a half call, and that is at 1108 is our cost for that position. Mid price is our cost, right? 1175 at the ask. So that's what, if I were looking at Apple, yes, that's what I want to see. Close above, retest, bounce, take the entry. But it's all a matter of, and I would only take it, Mike, as an aggressive trade. Why? Because look where my moving average is. I will not have a confluence up here, so I could take the trade. But listen, it's like playing a video game and you try to strengthen the floor before you run across it and you don't fall through, or it's like Home Alone. You got a big hole in the floor and you're going to crash right through it. I want to make sure I've got more strength underneath me when I stand. I'm a big guy. I want a lot of strength, right? I want that floor to be supported. That moving average getting up there to where that resistance line is now would give me extra strength in that area, causing a blue zone, a health zone, and I would feel more confident on taking that directional trade.
All right, Rob, let's just do one more. Let's just do Tesla for fun, for Raptor.
Oh,
Tesla's a fun one.
I am a huge Tesla fan.
Of the stock or the car or both?
Both.
Okay.
The company, Elon Musk, I think he needs to be appointed for sainthood. I mean, his brain is just out of this world, the things this guy comes up with. How do you run Tesla and outer space ship company? And I mean, come on now. This guy is just fantastic. But look where it is. We're kind of in the middle of nowhere. I like where the moving average is. This gap up yesterday, by the way, we took a trade on this yesterday. I called it out in the morning on Tesla. We did a bull put spread on it, and we took in $2.50 on that spread yesterday. It's worth about 45 cents right now. So we did extremely well with that move yesterday. But it's that overextension right now that's happened. We did get a slightly higher high today than the previous one back here. So I like that, but I really think we need that pullback to that 1103. Get away from we've got bigger sales. We're going to beat by 130% of last year or something. Get away from that news. Give me back into the 1103 pullback and a bounce. And now when we talk home run trade, look at the setup you've got there. I've got target one. My resistance is 1173. So if you called it 1170, and let's say you got in at 1110, you got a 60-point move in there for your first target. My second target takes us up to 1240 from 1110.
That's a ways away.
Yeah, but so each fib line, Spencer, each Fibonacci level is considered a standard deviation. two
Right.
standard deviations, and I'm going to be off on the number, guys. I never get it right, but it's like 96.8% of all moves are in there, or 98.6%. I never remember which one is right. But it's about 96% of all moves take place within a 2 standard deviation move. So we normally, this is not a normal move for a company, right? But look, when we failed on this one big day, we moved 2 lines. We moved back up. We got 1 line in play. We came back. We went 1, 2 lines. We went 2 lines. That one made it 3, right? We didn't quite get all the way up. So from this, we went 1, 2 lines. It's in other words, it's very doable, and we have been there before.
Hey guys, Robert Roy joins the show every single week, talk about his trades. The website is up on there, tradewithrob.com. Check it out. You can learn more, hear more, see more from Rob there.
Spencer, if I could, just on that site, guys, on that website, there's one, it's all free, that stuff that's up there. There's nothing in there that is a paid. If you go there, you're going to see 30 Days to Trading Success. I've been working on this program for a year, over a year. My team's been working on it for a year now. We released it purposely now. It's coming up in January. It's a free training. I'm going to show you what it takes in 30 days to become successful in the market. Free training. Take advantage of it. There's 4 different classes we're doing on it. I would register soon because we've only got a room that holds 1,000 seats on this one, and we pack it out pretty quickly. So if you're interested, go and check it out. If not, that's cool. I'm good.
That's how I am. That's why I'm not a good sales guy, Rob, because my sales pitch is always, hey, if you want to buy it, buy it. If you don't, okay.
Listen, guys, if you buy something from me, what you spend on that product is not going to change my life.
Yeah.
It won't, but it will change yours. So I'm okay if you don't buy.
It's true. Something. All right, Rob, always a pleasure, man. Have a good one.
You too, Spencer. Take care. Happy New Year again. Take care, everybody.
All righty. Hey, you know what I would appreciate from everyone is a couple more likes on this stream here. Where are we at on the like front? Let's take a look. See, probably not where I want to be. Can we get to 500 likes today? That shouldn't be too difficult, right? Maybe it will be. I don't know. We're at 103. Oh no. Can we get to 250 or let's get to 300? Let's make that a goal. 300 likes. That'll be the goal. As a reminder, we're gonna have the chief scientific officer coming up in just a moment here of Hoth, and she'll be on in about 10 or so minutes. Stefanie Johns is her name. She's the CSO of Hoth Therapeutics. So that'll be at 1:30 Eastern time. We're going to talk to her about today's news, what it means going forward, what else is in their pipeline. We'll take questions from our chat, as we always do. So stay tuned for that. Coming up in about 9 or so minutes. I want to address this question from the chat that I just saw. Let me go find my chat real fast. It was from is Elon in the chat? What's up, Elon? How are we doing? It was a question from Twitch. It was from Mr. Higgles. Great name, Mr. Higgles, on GNPX. So Mr. Higgles says he got in GN, he or she, I guess Mr. because it's a guy. So GNP got in GNPX yesterday when they made that huge move. And he's up 5%. Any idea what it may do next? No. To be blunt, no. No one knows the future. If I knew the future, I would not be here, right? Duh, obviously. But here's what I'll say. I say this for like every one of these like high flying trades, because this is certainly a high flying trade. The stock was closed Friday. Where was it Friday? $1, and it went from $1 to $4 in like a day and change, because they hit 4 in the after hour session last night. So 1 to 4 in one day plus. Okay, that qualifies as a high flyer. Now you're down to 282 today, but neither here nor there. This is not really my bag, my cup of tea, but this is what I would do if I was in this from yesterday. If you're in this from yesterday, you're probably up. You're probably up a little bit, right? Because most of the volume occurred, just looking at the chart, most of the volume occurred before we got to 283. What I like to do always, if I'm in a high flyer, which I have been previously, Just take and if you're sweating, take a little money off the table. Just take a little bit off, right? If you're up, trim a quarter, trim a third, maybe trim half, right? If you're up, that's just an easy way to just take some risk off the table, right? And just not worry as much. Just take some money off. If you're up, whether it's 5%, 10%, whatever, take some money off. That would be my tip number one. Tip number two is have an idea before you buy it as to what your plan is, right? When would you sell on the upside or downside? Would you sell at 4? If we got back to 4 today or tomorrow, would you sell? Would you sell at 5? Would you sell at 8? Right? Likewise, would you sell at 2? What about 150? If we got back to Friday's close was what? Like one something, right? My chart's being wonky, but yeah, Friday's close was like 130. Would you sell at 130? I don't know the answer for you, but like only you can really know the answer to that question. So tip number one is if you're up a little bit, never hurts to take some profit. Tip number two, have an idea going in as to what your best case and worst case scenario is. For example, and I keep going back to this because it's the swing trade I've got on right now that I'm, about to get out of. Okay. Palantir is a great example. I bought this 2 weeks ago. I bought it at 17. What did I say? 1797, I think was my cost basis. Okay. So we're at 1790 right now. So I'm down about 7 cents. My plan going in was very straightforward. You fall below these lows. The lowest I think was 1781. And I do like to give myself some extra breathing room, like for it to make a new temporary low, and then just in case it bounces. So like in this case, I'll just round to the nearest quarter. So I'll call it 1775. Okay. That's my target right now. If it hits 1775, and it very well may do so in the next few minutes, I'm done. That's it. Nothing wrong with that. But I don't have any orders out there, so I have to watch it because I'm afraid I'll miss it. So that's the other reason why I keep pulling it up is because I don't actually have a limit order. It's all mental. It's all my brain. But there's nothing wrong with taking a loser. No, you're out. Before you're in. Okay, we're going to okay, Amelius, I see you in chat. We can bring on Simba. Is Simba coming on today? Maybe. No.
Not today. Not
today.
I know of.
Okay, Amelius. We can get Simba back on. Simba stocks.
Is my mic on, by the way? Can you hear me?
Yeah, I hear you.
Can you guys hear me?
Yeah, I hear you. Okay, our next guest will be on in a couple of minutes here. Stefanie Johns again. I think that's why a few people are here. We will be talking about Hoth Therapeutics and the news from this morning ticker. HOTH. This stock, I think, has traded more volume today than in the last 8 months combined. Let's pull up a weekly. Yeah. Look at the volume today, right? 191 million shares. It's not more than it did all last year, but it's also not that much less, right? It's probably more volume than the stock has traded since April, right? So second day in a row that there's a high flying stock of the day. We're gonna have an executive from that company on the show. Yesterday was IMMX, which actually, if you pull up that chart, this is a good sign. Right, it's holding a lot of the gains from yesterday. That if you're long, which we are not, Aaron or I, that's a great sign. You want to see these gains hold. It's not to say it has to hold all the gain. It doesn't have to hold every single cent of the gain. It doesn't have to hold 7 or hold 780, right? But it's holding 6. It's not bad. In any case, we had IMMX on the show yesterday. If you missed that, check it out. Today, we're talking to Hoth. That'll be coming up now in a couple of minutes. Before we bring Stefanie on the show, Yeah, Mo. That's a great rule. Great rule. First rule, don't lose everything. Second rule, don't forget about the first rule. Before we go, I'll do it after Stefanie. That's fine. I was gonna do a quick read, but we'll do that after this segment. Day trading mom, can you look at Roblox? Aaron, aren't you long Roblox? Or you were?
I was.
You're not long anymore.
I'm long Roblox in spirit, but I'm not
In spirit. Okay.
physically long.
Okay.
Or not monetarily long right now. But
it's growth. It's growth, and growth is out of favor.
I
don't know what there is to say.
I want to buy some Roblox calls right now.
Do you want to buy it now? Can you look at the chart, please? Do you want to buy it now?
Yeah, I do.
Oh boy. Okay. He's his own person. You can do that. All right. What you want to do that? Let's do it after we bring Stefanie on.
All right.
Okay. I don't want you like buying stuff while we have a guest here, because that would be rude of him. So without further ado, hold on. I'm just checking on our likes right now. Can we get to 200 likes in the next 30 seconds when I bring Stefanie on the show? I think we can do it. Hit the like button. Stefanie Johns is the Chief Scientific Officer of Hoth Therapeutics. We're going to bring her on the show right now. And we're not going to get to 200 likes, but that's okay. We're going to bring her on. Stefanie, good afternoon. How are we doing today?
Hi, good afternoon. Happy New Year.
Happy New Year. Welcome to Benzinga Live. Your new year is off to an exciting start. What I've been doing lately is I've been like trying my best to like read like news for these like these healthcare news events, and then having the person correct me if I'm wrong, because inevitably I butcher it. But I'm not going to do that right now. I'm just going to let you explain exactly what the PR from this morning said. Okay,
sounds great. So Hoth is developing a new Alzheimer's therapeutic, which we are terming HT-ALZ in the release. But essentially what we've done is we've collaborated with Washington University top scientists, John Carrito and Carla Udy. And for our first study, what we have looked at is if we treat Alzheimer's disease mice, so it's a mouse model, that's very well established to use for pharmaceutical development for Alzheimer's drugs. And actually looking to see if it can reduce the amount of amyloid beta in the interstitial fluid of the brain. And just to give some background, so Alzheimer's disease, the two main culprits that are attributed to Alzheimer's pathogenesis or progressing in severity are amyloid beta plaques, which form in the brain, as well as neurofibrillatory tangles. And so what we are actually looking at is the first one, the amyloid plaques. And so what we've demonstrated during the study is that our drug can actually prevent the potential plaque formation by specifically reducing amyloid beta in the brain fluid. So that's really exciting as a first step towards development of this drug. And so this first study was only a small snapshot, but it was administered as an oral drug, which is fantastic. So we can continue on the oral route. And for the next steps, we're going to look at a longer study with chronic dosing and looking at the actual cognitive behavioral effects.
So, I was going through and looking at your press release history, and I didn't see any announcements. Is this the first public acknowledgement or public statement of any kind that you're working on this drug, this disease at all?
So we did have a press release, I believe, in early 2020 regarding a patent filing. But we didn't really have much focus on it. We hadn't really made development decisions about it until later last year. And so this is really the first big release for this program. And we're hoping, now that we have this really strong data that, this will continue to be a strong candidate in our pipeline.
Okay, and we'll get to that pipeline in a second. But so what is the next? What are the next 2, 3, 4 steps here?
So the next step is to actually look at this longer dosing study in the same Alzheimer's mouse model. But now we're looking at, by treating mice every day, what is the longer term behavioral or cognitive effects compared to being treated by vehicle. So we've already shown that compared to basically a placebo control and the baseline, we can reduce amyloid beta, meaning that we can potentially be a disease modifying drug. We don't know yet. We can't say that, but that's the pathway that it might look like from an overall development standpoint. So then the second part is that modification going to contribute to a reduction in symptoms? And so we should be seeing that data in this first quarter, actually. Like the study's already started. And so we should be getting that data fairly quickly. And once we get that, we're going to be doing formulation development and start having discussions with FDA.
So inevitably, when you see a stock move like this, the logical question for a biotech is, would you guys raise money? So would you raise some money right now, or how is your cash position?
So we are looking to position ourselves for fundraising in the near future. Our CEO, Rob, and I will be, the point person on that, and as he goes to investor meetings this year.
Got it. You mentioned the pipeline. You guys have a lot of other things in there. I was going through. Can you give us an update on BioLexa?
Yeah, sure. So BioLexa is currently in our second phase of our clinical trial in Australia. We just started to dose patients with atopic dermatitis. So just to give you a quick refresher, BioLexa is in development for treatment of mild to moderate atopic dermatitis, which is also known as eczema. And we've already shown some really great safety data in the first part of this clinical trial in healthy subjects. There were no significant adverse events, no treatment-related adverse events due to BioLexa.
And is this the furthest along you are of all the candidates in your pipeline?
Yes, from a clinical perspective. However, a couple of our programs are 505(b)(2) programs, and so they're not necessarily a very direct program like the Alzheimer's program.
Can you explain that program?
Yeah. So 505(b)(2) development pathways basically leverage existing data in the public domain. So it could be leveraging data from an existing approved drug. It could be published literature. It could be data that exists outside of the US, and you can rely on that to support your drug approval. So that's the type of development pathway we'd be pursuing for this Alzheimer's drug, because there's quite a bit of data already in the public domain that would help us jump faster into the clinic, because safety is already established for this drug for short-term dosing. So it'd be up to us just to extend that dosing period.
Got it. And then going back to the pipeline here, so we talked about BioLexa. You guys had a lot of headlines last year, the last 2 years, I guess. Now I can say 2 years because it's new year, but the last 2 years about developing a COVID treatment or intellectual property for testing, COVID antiviral. Where are you on those developments?
So the COVID therapeutic, we still have going on in the background. It's still in the early preclinical candidate optimization phases. We've done several, live viral assays with different lead candidates, as well as with different viral variants as well. So we're still looking at that program and analyzing it. Really, our focus for 2022 is honing in on our lead assets in the pipeline and focusing on those based off all the data. We've collected a lot of data across the pipeline. So we're really at a position now where we can hone in on what's really going to be the most successful for the long
And just
term.
to be clear, what are those? It's BioLexa and it's the Alzheimer's treatment.
So we'll probably do a more public update in the future as far as what those candidates are. But I would say offhand, our leading candidates are probably HT001, which we're gearing up for a clinical study this year, potentially BioLexa, based off of the clinical trial results that we're expecting this year. The Alzheimer's program, HT-KIT, which I think could be huge as an oncology drug, has multiple applications, and it's a significant unmet need. So that's a faster pathway. But then we have some other data coming in on other programs like HT003, which is actually a platform that could be used for treatment across inflammatory bowel disease and derm programs like acne. So that one is kind of a package deal. So, we'll probably have a more formal release as the year goes on as to what Hoth's main focus is, but we do have a lot
That's a lot of stuff, Stefanie.
Yeah, it is.
That's a lot of stuff that I'm sorry, but there's no way you can be working on all that stuff.
I mean, we do. We have studies going on. I can tell you,
Okay.
we have lots of data. I come from a very broad background. Rob looks for what is going to be, a game-changing therapy and unmet need from a business and marketing side. And, we have great operation support. So, we're very lean and we get it done.
Do you think this is just, I'm asking you to theorize here, but do you think one of the reasons that there's all this interest today specifically in your company is just the fact that there's no cure, there's no nothing really for Alzheimer's, and every time it's not really so much you as it is the disease. Every time we get a headline on this freaking disease, it reverberates.
Yeah, I mean, Alzheimer's is a hot topic. I mean, I think it is such an impactful disease. But I also think, or I'd like to think that this drug is so different from what else is on the market. I know that, there's a lot of controversy going on from the recent approval of Aduhelm, this year, because it's so expensive and, the efficacy is debatable depending on who you talk to, but it is there and it is considered a disease modifying drug. But then the rest of the portfolio of approved drugs are just treating the symptoms. And I think our drug has the potential to be different because maybe it's disease modifying, that's yet to be proven, but it has the potential. But it also has other properties that we already know could also be beneficial and treat more than just the symptoms that have not yet been shown in this particular study that we press released on, but the next study should basically confirm that. But there's already information in the published literature. So, I think this is a completely new class of Alzheimer's drug that doesn't exist, but I could think has a lot of potential. So I'm hoping that people can see that, in comparison to what's already out there.
You mentioned the patent that you had announced. I think you said it was 2020. How long has this been in the works? How long have you been working on this?
I think it has probably been about a year. Originally when we filed the patent, we had just started other large programs such as the BioLexa clinical trial and HT001. So we had kind of bounced around and trying to find the right fit to do the actual research. And I have a really good relationship with the research group at WashU. And so it kind of just fell into a really strong collaboration with this, world-renowned research group.
Anything else we need to be aware of as far as upcoming events? Anything, as I'm sure you've seen, a lot of attention on you guys today. So anything that the public should be aware of?
I think, we have a lot of really big data that are going to be coming out, and we're planning to do, press releases throughout the year, whether it's clinical or preclinical work. So I'd say just keep watching, and, we will be sure to, continue with the data updates.
Stefanie Johns is the CSO, the Chief Science Officer at Hoth Therapeutics. Stefanie, thank you so much for coming on last minute on Benzinga Live today.
Thank you so much for having me on.
Alrighty. And Brian in chat. We asked Stefanie about the need to raise money, and her answer was that the CEO, which is not her, would be addressing that, but she's, as the Chief Science Officer, not really the person who can speak directly to that. So I guess I would just echo her last comment, which is stay tuned. And she said that they would be looking to do that, but could not provide specifics. Is the answer to that question, Brian. He asked about an offering.
Good job, Spencer. I enjoyed that interview.
Thank you. I don't even remember it. That wasn't it. Was that in poor taste? That may have been in poor taste. I don't know. Sorry, the joke may have been bad.
The joke wasn't that he doesn't think that was important. He just he does so many interviews.
No, it was an Alzheimer's joke, and I think it was in poor taste. I apologize.
So you
didn't even get it.
I went over my head.
No,
most things go over my head.
That was a poor one. That was bad. Let's rewind the tape on that.
All right, wait. What were you gonna say?
No, I was gonna. No, I don't know what I was going to say. What were you going to say?
I was going to show you that this is kind of off topic, but I thought you might find this interesting. Oh God, this quality is not good. But here, let me just show you what I was going to show you real quick. All right, so this graph is showing on the bottom is double team rate. So this is for NFL D linemen or outside linebackers.
Yeah, okay.
So the top is showing how much they win their pass rush. So they either sack the quarterback or disrupt it.
Okay.
And this is their double team rate. So in the top right corner is showing that they're still effective at their pass rush, even if they're getting double teamed. So you see Nick Bosa up there, Myles Garrett, Clowney, Max Crosby, Charles Harris, Detroit Lion, also former Mizzou player. So shout out Charles Harris.
What's the takeaway here?
Takeaway is look at how crazy this is. So these are all the players, right?
Yeah.
You get the gist of it.
Okay. Yeah.
Top right, they're getting double teamed.
Top right is good. We got it.
Top right is good.
Yeah.
Zoom out. Here's Aaron Donald.
Oh, that's pretty crazy.
Isn't that crazy?
That is pretty nuts.
All right, that was all.
Okay. Do you want to set up a Roblox trade? Or not yet? Not right now.
I don't know. So Roblox is one of those stocks. I have like a short list of option stocks that are just great to trade options on because they move a lot. They're volatile. And Roblox is on that list. So really, I don't know. I mean, it's someone else that's out there that's
fine.
like
you don't have
good with charts.
I'm not gonna make you do it.
Let me know if now would be an inopportune time for me to buy like an $100 call that expires. But I am gonna open a trade on Roblox here in the next week or so.
Okay. Michael DeSesto, please email us. I put our email in the chat. If you have any suggestions for future guests, email is the best way to convey that because it goes to the whole team, shows at benzinga.com. It goes to the whole team and not just me looking at the chat right now. And I will forget it. So email us always shows at benzinga.com. Check it out. Okay. What I wanted to do before, because we did not do this for a couple of days here, is we are coming up on the end of this offering period for Nightscope. We are coming up. It's going to be like in a couple of weeks, actually. I think is when this offering period ends. So what I wanted to do is do a quick read about that. If you don't know about Nightscope, it is a fully autonomous security robotics company. Okay, so we're talking robots that patrol public places like airports, parking garages, etc. They've generated over $13 million in lifetime sales and have over 1 million hours of field operations. So the company's doing a Reg A plus offering. It's not It's not an IPO. It's different. It's similar, but it's different. Okay. What that means is they've got over 28,000 investors and they've raised over $100 million. And the offering is available to the public now on the page that's on the screen, which is, I'm going to bring it up on the screen, like the actual URL. It's startengine.com/Nightscope. Where's my URL? There it is. Startengine.com/Nightscope. That's the URL to access the page that I'm showing you right now. And that has all the information on the offering, all the details, all the risks associated with it. For compliance purposes, I am going to put a couple of links in the chat. There's your link to join, link number 1. I'm going to throw some more links in there. Again, these are for compliance purposes, but check it out. I do believe that the deadline for the offering is like coming up. If not next week, and maybe the week after. Don't quote me on that. Again, the information would be in the offering circular. So all those links clickable in the chat. We'll make sure they're in the description as well. And there we go. Okay. Boom. All right. We got 10 minutes left here. So here's the plan, because there's no roadmap today. So here's the plan. We're gonna do something we haven't done in a while. We're gonna do some replays. Okay. So we have 2 replays queued up for you. We're gonna start them at 2:00. The first one is and they're gonna be on this stream. So this stream is not gonna end at 2:00. We're just gonna do a replay straight from this stream. The first replay is going to be an interview that Mitch did with oh gosh, why am I blanking on his name? It's Todd
Stottlemyre.
Todd Stottlemyre. Thank you. Todd Stottlemyre, who was a retired professional baseball player. He was a pitcher. He's the son of Mel. If you are a Yankees fan, you know Mel Stottlemyre. He was the longtime pitching coach. Todd is his son. And Mitch talked to Todd because Todd is after he left sports, he became like a trader. And so Todd spoke to Mitch last year just about that switch and about his mindset and all that. So we're gonna play that, and then after that we're gonna do a interview we recorded about NFTs and taxes. Tax day coming up here in, well, not coming up, but in 4 months. Or I guess 3 months, right? It would be 3 months. So it's about NFTs and taxes and how to deal with that. So that's what we're going to do at 2:00. So we got a couple replays, and that will take us into 3:30, which is at the close with myself and Joel. So that's the plan here for the day. The roadmap will be back tomorrow. So no worries there. Solaire of Astora, am I shorting AMC? No, I don't have the risk tolerance.
The cojones.
I don't have the cojones to be shorting AMC. The problem is even if you're bearish, right? Oh wait, this is actually interesting. Let's pull up that AMC chart. This chart's actually interesting here. Something is happening in AMC right now. And what is that something? It is a come on chart. There we go. It is a moving average crossover. Look at that. So my dark blue is the 50-day, and my light blue is the 200-day. Typically, a crossover of the long term above the short term is a bearish indicator, and vice versa, right? A crossover of the short term above the long term is a bullish indicator. In this case, we're going to have the long term, the 200-day, about to cross above the 50-day. People who do technical analysis talk all the time about how you cannot rely on any one indicator to be your everything. It's all about confirmation. Have 2, 3, 4 different signals, right? Confirming your idea. This is one such signal. It is not the only signal, but it is one signal. And based on this signal, that it would tell you that the price action in AMC right now is not looking great. Now, you can also see that just by looking at the chart. You don't need any fancy indicators to see that AMC is in a downtrend. The problem is I'm much too afraid of AMC to short it, right? Because with my luck, like the next day would be the day that something crazy goes down and it rips to like 60 in my face. So I guess I could buy puts. I'm sure they're crazy expensive though, right, Aaron?
Yeah, it's not even that they're expensive. I think the issue with buying puts here is just that if the stock continues to move down, that you start losing some of that vega, some of that implied volatility, and you can actually lose money on the puts even if
that's a great point. And
the stock is
look at
moving
AMC. It's not even that volatile of a stock.
No,
that's the thing, right? If you go like from August to now, right? So the last 5 months, it's not that volatile. It's only move a lot.
I don't know. Where was AMC trading at before the COVID pandemic?
Well, just before COVID in general?
Yeah, like February of 2020.
Yeah. Gonna go back now for 2 years. It's $7. $7.
Yeah, I think that's a lot more of a. I don't know. We'll see.
But yeah, it doesn't really move a lot. Like in the last, just look at the last. Let's just pull up a weekly, and then we'll zoom in on the weekly. We'll zoom way in on the weekly.
Daniel's asking about Hood.
So I saw somebody also mention. Somebody mentioned some software stock. I forget what it was. I apologize. And they said it's down for no reason. Well, growth is down today. It's not down for no reason. It's down because growth is down. Every growth, you can look at ARKK as a proxy for growth, right? Growth is down today. I don't know why. I don't really care why. That's just the way it is. So Robinhood is a growth stock. It is down with growth. It does not need to be news. It's just the way it is, right? At some point, you would have to think at some point these stocks stop going down. That's my Palantir doing. Oh boy. All right. Palantir, at the rate we're going, I'm going to end up selling before the close today. Because we are flirting with my level of 17 and a quarter. We are flirting hard. If I wanted to be bad, I would say, oh no, let me wait till 17, the all-time low. Right? Or not the all-time low, but the low from last year. The low from the calendar year 21 was 1706. Oh, wait till that. Nah, that's too far. That's 80 cents from now. Too much. Too much heat. I'm giving it 10 cents right now. That's my leeway. 10 cents. And then I'm done. Close it. Everyone's saying close it. I mean, I'll give myself a little bit of room, but yeah, I will close it.
Al in the chat is saying, which stock should I YOLO? Please give me just one that will go up. Well, historically, your best bet would be, I don't know, Apple.
Yeah, right. I mean, you know what I would do, Al? This is what I would do. I would go on whatever broker you have. I don't know. I would run a scan. I would go into Benzinga Pro or whatever tool you use. I would run a scan. I would look for stocks that are making 52-week highs. And I'd put all my money on one of those. I wouldn't actually do that, but that seems to be what you want to do.
I like that. That's a good idea.
So whatever is making a new 52-week high today.
Can we do that in Benzinga Pro?
Yeah, we can, but I don't really want to. So we got the screener. Here, let's go to the screener. I have to admit that I'm not a super savvy Benzinga Pro screener user. Okay. That being said, let's do this. So here, let's run a screen real fast. Two things. First thing is we're going to filter out low price stocks. I'm just going to, no, not low price. We're going to filter out super, super small stocks. So we're just going to do everything that is above $300 million in market cap. That's step one. Okay. Step two is we're going to go to the technical tab and we're going to do 52-week high. And we're going to do any. Let's just do any.
No, you have to do
No,
something in
let's
there.
not do that. Let's do
That it's within like 3%. So up.
yeah. Let's do 3%. Oh, no, let's do. Yeah, fine. Let's do all 3%. That's fair. Okay.
Ford, we knew that was going to be on there.
And then
Raymond
I
James.
want to sort by percent change here. So here's what we got. Okay, this is a very basic screen. Again, I filtered out super small companies, but we've got some financials, right? Raymond James, aren't they getting bought?
Raymond James and Charles Schwab.
Did you see Schwab today? Schwab's having an amazing day. We got Toyota, right? We got a Vista Outdoor VSTO. Let's pull up some charts here. Go to my details page.
I can get behind Toyota.
Toyota?
I drive a Toyota.
Look at Toyota. Wow. They reported the sales from last year.
Oh, speaking of Spencer, I
They
have
had
a
news.
service appointment at the Toyota dealership at 7 a.m. on Thursday.
That sucks. Toyota blast off. Look at Schwab. Blast off today. Was that an analyst? It was UBS did that. So to answer your question, and this is not financial advice, but if you really want to YOLO, I would YOLO a stock that's already in an uptrend. But that's just me. How is Ford doing? Are we at 25 yet? No, we're not. This Ford move is bonkers. It is absolutely bonkers. Ford is doubled in 4 months. Ford doesn't do that. Crazy. Mitch called out GM this morning. That was a nice call out.
I like so someone was asking about AMD being down. I don't know if there's specific news why AMD is down so much, but Nvidia and AMD are both down more than 5%. Not a good day for growth overall. But what's interesting, and we talked about this stock yesterday, or maybe it was last week, I don't even know anymore, but TSM, Taiwan Semiconductor, is actually up 2.5% today. So it's showing a lot of relative strength in that industry, in the semiconductor space. I really like TSM here. I'm for the first time opening a position here at TSM. Going to get into that. What do you think of that, Spencer?
Didn't it have a big move the other day, or is that was a different one I'm thinking of. Never mind. No, it was TSM. That's what I'm thinking of. Yeah. Look at that chart. So it's already had a huge move. So
is Lisa coming?
What?
Someone in the comment asked, "Is Lisa coming?"
Lisa Sue?
Are they talking about Joel's Lisa?
No, I don't know who Lisa is.
Lisa
Who's
Levine.
Lisa? It already had a big move. Why not just wait till retraces for a second? Okay,
sometimes they never retrace.
That's true. Sometimes they don't. So here's the situation. We're gonna air a rerun right now, but before we do that, what of Todd Stottlemyre? But before we do that, I almost think it would be like just a nice tidy end to the show if I close my Palantir right now, even though we're not at my price. I'm gonna be so pissed off if we end up back at 18, but we just made a new low of the day just now, so we're at 1781. I'm gonna go ahead and close out this Palantir, even though I set out it was 1780. I set out to wait another nickel, but I'm not going to. So, all right. We're going to close, sell to close, and not worry about. Not get too cute with it.
KISS.
Keep it simple. Market order. Keep it simple. Will I get the best fill in the world? Nope. Do I care? Nope. 1780. That was that. And on that note, we are done for the day.
Boom. We'll be back tomorrow. No show on Friday, but we will be back tomorrow and on Thursday. Thank you guys for sticking around with us today on Benzinga Live. Please smash the like if you have not already. And
where are we at on the likes? Are we at 250? No. Can we get to 250? Let's go. Hit that like button.
We wish you, your family, a happy new year and happy trading. Hope everyone's portfolios are looking green today. With that,
mine's not now.
We'll be back tomorrow.
Todd Stottlemyre replay starting right here, right now.
So I shouldn't end the stream right now.
Don't end the stream.
I'm about to do it.
Don't do it.
All right, fine. I won't.
Todd Stottlemyre.
Shelly, we have a internal Benzinga meeting on Friday.
We have every quarter we have an all hands meeting. It's required that everybody be there from the whole company, and that meeting is going to be this Friday. So
yeah.
If you want us to live stream it, email Jason at Benzinga.com.
Yeah, and also if you think that Spencer or myself should be awarded with like a special award, email Jason at Benzinga.com on Friday.
That's also a good idea.
If you want, to see Spencer or myself again win a special award on Friday, all you gotta do is email Jason at Benzinga.com.
Alrighty. Let's start this replay.
All right, guys. So welcome guys to Peak Performance. This is a show that was really all about this book right here. This book has started a brand new show for us here at Benzinga, going to be called Peak Performance. And I'm more than happy and glad to bring on the special guest, the first guest of this show, which is Todd Stottlemyre, 3-time World Series champion pitcher, author of The Observer, a modern fable on mastering your thoughts and emotion. And not only that, but someone I'm going to really truly look up to now. So welcome, Todd.
Mitch, man, I appreciate it. I'm humbled. I'm honored. I'm grateful. Man, it's just good to hang out with you here for a few minutes.
Yeah, when I first got this interview, I thought about it and I said, how could we relate it to finance and kind of bring it with our viewers? And I really thought about it. And the more I think about it, this should be a show itself and how we can keep working on getting towards peak performance, whether that be in sports, whether that be in finance or in your personal life or career.
Yeah, man, I love it. At the end of the day, it's like, it always goes back to creating clarity and awareness and what we're focused on in the moment. And what is that telling us? And what information does that give us? And then what do we do with that information? So I'm excited to share with you today as we jump in.
Yep, perfect. So I got a little opener here. You're a 3-time World Series champion. You had a 14-year long career, 138 career Major League wins. Can you tell us what it was like to be drafted as the 3rd overall pick in the 1985 draft by the Blue Jays? The dream come true.
Yeah, for sure. And crazy enough, it was my 3rd time being drafted. First time was out of high school by the New York Yankees. And after growing up in Yankee Stadium, where my father was a pitcher for the New York Yankees, I would tell you I was hard pressed not to sign with the Yankees and go on to college, but seemed to be the right decision. Then I got drafted by the Cardinals and then ultimately by the Blue Jays. And I got to tell you, it was at the time I didn't even realize the blessing that it really was, is because the Blue Jays were really starting to put great teams together. And, I arrived at the perfect time. I was in the perfect place, perfect time. Everything was coming together. Had incredible teammates, had an incredible manager, played for, the Blue Jays turned out to be an unbelievable organization where we won some world championships. So it was a great ride.
Definitely. And one thing that I've always been interested in, I've watched baseball for years. So, pitching inside a dome, and I couldn't imagine pitching inside the Sky Dome at that time. How was it pitching in those sold out times or times of the World Series?
Yeah, it was, when you look back on that, 1992, 1993, we drew over 4 million fans. But I'm going to tell you, it was even more than that, because the fact of the matter is that every seat was not only sold out, but there was someone in the seats, and they even created a standing room only area. And it was like night after night after night. It didn't matter where your eyes scanned the stadium. Everyone was in a seat everywhere. It was incredible. I got to tell you, the city of Toronto, the country of Canada, they truly got behind that organization, those ball clubs. And I always think back and I look back on those teams, and it's pretty crazy where 25 guys coming together from multiple different countries, different races, different religions, different skin colors, but all those 25 guys all coming together for a common vision, for a common purpose, and we truly became family. And I always kind of draw back, or I reflect back and I look at that situation and I'm like, what a thing for the world to take a look at, that different races, different countries, different religions, that people truly can come together. And at the end of the day, we truly all want the same things and we're really one and the same.
Yeah, and one thing that I've noticed in the pandemic time is that, we've got to come more together. So hearing stories like that is definitely what it's all about.
Yeah, for sure. I mean, I tell you, unfortunately, you kind of take a look at 2020 and it's like the pandemic brought the worst out in people, right? Instead of the best out in people. And, we own and operate a number of companies through a private equity fund and my partner and I, and when the pandemic hit, it was like the first thing that came to our minds is there are going to be people that are going to come out of this worse because they're going to focus, but nothing but on the pandemic and how bad it is, and they're going to get caught and they're going to go down a rabbit hole. But then there's going to be other people and they're going to come out of it better because they're going to focus on what they can do. And at the end of the day, our focus matters and it counts. And if we're focused on things we can control and things that we can do and stay away from the things that we can't. So it kind of really became our message to all of our people, all the employees, all of the companies, all the executives, is let's focus on what we can focus on and just try to get better every single day.
Definitely. And that leads me right into my, my first question kind of regarding more into the book. And that's morning routines. Morning routines that are mentioned to start the day. And what does your morning routine consist of, Todd? And why is the first hour of the day known as the championship hour?
Yeah, it's funny. I kind of named it Championship Hour because it's all about building the champion that lives inside of you. And, I believe we're all born with a seed of greatness. Obviously, all of our gifts and talents look different, but at the end of the day, we're all, in my opinion, we're born limitless. We're born for greatness. So I kind of named it the Championship Hour because that Championship Hour is all about building us. It's about building our mindsets. It's about building, our emotions and our emotional sets. It's about building our states. It's about growing our mind. It's about, meditating and prayer and prayer. It's about physically getting fit and taking care of our bodies. We got to take care of our minds. We got to take care of our hearts. We got to take care of our bodies. And for me, it's very simple. It's pretty crazy. I mean, it's become such a routine, right? And unconscious for me is that I wake up, I literally make the bed. It takes me, literally about 30 to 45 seconds. And then from there, brush my teeth. From brushing my teeth, I walk into my kitchen. I got 25 ounces of water waiting on me to hydrate my body from laying down all night to kind of rehydrate all my organs and kind of, gather my energy. I grab a cup of coffee. I head to my office. I spend a little bit of time praying. I push on a podcast. I'm trying to grow my mind, capture new ideas. I got my journal out. I'm capturing all of those. And then I'll file the best ideas in a certain file. And then from there, I turned one of my garages into a home gym because of COVID. And I literally walk down the hall, walk into the garage and spend about 60 minutes doing workouts. So my championship hour really has become 2 hours. But at the end of the day, from wake up until being done to being showered to being ready to take on the day, at 9 a.m., I'm ready. I'm ready mentally. I'm ready physically. I'm ready emotionally. I have incredible energy. I have great mental energy, emotional energy, physical energy, because here's what I don't know. I got to take care of me because I have no idea what's going to come at me during the day, right? I don't know what obstacles are going to come. I don't know what opportunities are going to show up. But if you're not prepared personally, when the opportunities show up, you will miss out on those opportunities. So I spend a lot of time preparing, just like I did for a game. I prepare for the game of life every single day through my championship hour.
Yeah, definitely. One thing that I just started recently, and it was thanks to the book, I went right back to the morning workouts, with such an expanding and building that I have to do with my career. One thing that I've noticed is that maybe I'm just not focusing on the fitness side, and I need to continue focusing on that side to keep it going.
Mitch, what's awesome is not only is great for you physically, your health, your fitness. I always tell people, hey, if you don't take time to be healthy, you're going to have to take time to be sick, right? And it's like, man, who wants to take time to be sick? So what can we control? What can we focus on? But not only that, not only is it great for your body, it's great for your energy, and it's also great for your mind and your brain. And here's the other piece that so many people miss. When you accomplish something early in the morning, the psychological benefits of achievement, they start to build momentum. It's kind of like, as soon as I started making my bed first thing in the morning, it's like, bed is made, what can I do next? And it's almost as you build momentum, psychology, momentum on achievement, and it just puts you in that place is, what can I do now? What can I achieve now? And it's just an incredible routine for peak performance and getting in the state and ready to achieve that day.
Yeah, definitely. Nothing like the power of decision, right? And so Sky, the son, in the Observer, keeps a journal. And I thought this was very important, because first, it's kind of mentioned as, kind of get a little bullied about it. And really, journals are important, Can you tell us how this can help keep the track of our goals and at the same time keep forefront to us what's important?
Well, there's power when you write your goals down every day, right? Is you kind of keep sending it out there that's what I want to achieve. That's what I'm chasing. That's what I'm pursuing. And then the other thing is there's so much power in keeping a journal. It's like, even when you're struggling, it's like to write down the struggle in a journal, to kind of like put a pen to paper, right? It's to dump it. It's to get rid of it. It's to release it. Once again, it kind of goes back to our state of emotions and this and that. There's something about like sharing it, and you're sharing it with yourself. But not only that, is when you do share it and when you put a pen to paper and when you journal it, it gives you now a chance to kind of take a look at it and focus on it. And as I focus on it, I can ask my questions. What can I do? What can I do better? What am I supposed to learn here from this setback, this struggle, this disappointment? And then you get to, on another page of a journal, start to write alternative strategies. Man, it's a great way to kind of get centered with yourself, get your mind, get your heart around it, get your thoughts and emotions, and create this awareness and clarity around what we're going through. And it's kind of like, it kind of relates to the book, The Observer, because The Observer is all about awareness. It's about mental awareness. It's about our thoughts. It's about how are we thinking? And are they serving us? Are our thoughts serving us? And if not, as a human being, we have the power to change that thought instantly. And as we change that thought instantly, as we go from a negative state into a positive state, it doesn't happen by a click of fingers, but the thought can literally be the snap of the fingers. But then if we all focus and we'll meditate on the positive thought, what'll happen is emotionally, it starts to gravitate and put us into a different state. And as our emotions start to get into a different state, a positive state, a performance state, we begin to take actions with that state. And that's the beauty of really creating this awareness, becoming the observer of, hey, how do we think? How are we feeling? But then the question is, what can we do about it? What can we change? What are the options that are available for us? So it's such a powerful tool.
Yeah, definitely. So I think, definitely, one of the things that people get away from is journals as they grow older. But really, I think they can actually be probably even more beneficial to us as adults than they can when we were young.
It's the greatest book you'll ever write is those journals.
Yep.
I have 5 children, and I've been journaling now since like 1993. And I just think back, and there's so many times I look back, and it's so fun to be able to look back and how was I thinking then? What was I feeling? What was I thinking? What was I doing? What were my strategies? What great lesson was I capturing at that point in my life? And it's not only a measurement of your growth, but you can go back and kind of catch yourself sometimes. And it's like, aha, man, I forgot about that. It kind of got away from me. And it's the power of journals, because if in fact we rely on our memory, man, we're going to be in big trouble, right? Because, at the end of the day, that's one of the beauties about not only taking pen to paper, it just makes that thought and that lesson, it just makes it so much more powerful and impactful.
Yeah, definitely. One of the things that happens to a lot of traders is that they don't take a journal of their trades. just that alone is an edge, you know? So definitely. All right, so let's get into the next one. I want to relate a question to trading. You know, the book The Observer, you know, a lot of the investing side, I think, is more psychological really than learning kind of trading. And so two areas where we can further mastery of the mind is really getting into the zone and winning the inner game. You know, can you tell us why it's important to go ahead and try to get into that zone, and then of course keep battling and winning that inner game?
Yeah, getting in the zone is kind of like a state of flow, right? It's where you're so focused on the task at hand, right? And you get yourself and your brain and your brain waves into this situation and in these moments, right? And to where literally conversations can be going off to the left of you, to the right of you, in front of you, behind you, but you hear nothing. I always refer to being in the stadium and being on the mound. And I pitched in front of 50,000 people, screaming fans. But when I'm in the zone, when I'm focused, when I'm at my best, when peak performance is happening, and it's like when you get in a zone state of flow, it's like it's happening automatically. But what's crazy is you can be in a stadium of 50,000 people and you feel as if you're in a room all by yourself, like it's dead silent. And the opposite of that is when you're standing on a mound or you're getting ready to make a trade, all the noise around you becomes an interruption. And that noise around you, the interruption, all of that noise, it's not their problem, it's your problem, is that we're not focused. We're not 100% focused at the task at hand. You know, I think about trading, I think about pitching a game, I think about trading, I think about the psychology of it. You know, it's kind of like, you know, people will say, hey, you know, you're only as good as your last game. And I'm always like, no, you're only as good as your next one. The last one's over. Whether it was good, bad, or indifferent, it's kind of like trading. You're not as good as your last trade. You're as good as your next one. See, the last trade, the last game, the last pitch, it's over with, right? Whether good, bad, or indifferent doesn't matter. But here's the thing, is like, if it was good, you can't buy your own press because you're going to get caught getting lazy and you're going to not have the laser focus on the detail that you need to have it on, which is what's important right now, right? And then the other thing is what if it was a negative trade? Or what if it was a negative game, right? You got to learn from it, reflect from it, get what you can of it, and then let it go and then move on. Because if you carry the last bad trade into the next trade, you're not going to be all in, man. You're not going to be near as aggressive. You're going to be tentative. And when we're tentative or we're tight, whether you're physically or mentally, you start to make more mistakes and they start to compound and it becomes kind of a snowball effect. So, it's really about getting into that place of focus, creating the awareness. You know, one of my mentors said, Todd, he says, as you create more awareness and clarity, he says, what happens, you start to make better choices. And as you make better choices, you start to get better results. That came directly from one of my mentors, Mr. Robin Sharma. He says, Todd, get better awareness, better clarity, make better choices, get better results. And I'm going to tell you, you can take that principle and that model to every aspect of your life, whether you're competing or whether you're not competing. You're just living life.
Yeah, you know, one of the things I always say, you know, and there's actually a book that refers kind of Into the Zone. It's by Mark Douglas, and it's more on trading itself. And he's one of the mentors that I listen to. And definitely, you know, once you can really focus and stay in that present, that now being, that's when we're at our best. That's when we're at that peak performance, because there's no distraction. And like you said, you only see the catcher's mitt, and the next pitch goes.
Yeah, you know, it's like it's kind of like what's going on, man. And I always say, you know, if our thoughts are on our last trade or our thoughts are on our surroundings and we're not getting laser focused, then I always tell people, I go, we got to turn the channel. You know, you got to turn the channel on those thoughts. You got to turn the channel on those emotions. And at the end of the day, it's like one of the great questions that comes up with is what's important, like right now? Like, what do I need to focus on right now? Like my coaches, my mindset coaches, my pitching coaches, they always used to tell me, Todd, it didn't matter the pitch you just threw. It's like this pitch, this moment, what are you going to do with it? So it's like this trade, right? It's like this trade, this moment, what's important right now? What am I going to do? Am I going to push that button? Am I going to make this trade? And that when all of our focus and intention comes to the breath that we just take, that very present moment, and where you where you turn the channel or you put a roadblock up to anything that's happened up until that point of time, this is where you make your greatest moments. This is where you live your mastery. This is where you make your greatest decisions. This is where you're in your peak performance.
Yeah, and you know, one thing I've noticed is you can't stay there, so you definitely have to keep working to get back into that state of mind.
It's a practice. You know, I got a tool, and I talk about it in the book, The Observer, the 180-degree mindset. And I think about it. It's like, okay, so if I step away from myself and I'm observing the thoughts I'm having, right? And I'm like, wait a minute, these thoughts are not positive thoughts. They're negative. They're terrible thoughts. Literally just call time out on myself. And I say, what is the opposite of that negative thought or of that terrible thought? What's 180 degrees from there? You're going to land in positive territory. At that point, like if I'm creating this awareness, if I'm observing the way I think, or if I'm observing the way I feel, and I don't like the way I feel, it can be 180-degree mindset can be applied to your emotions and how you feel. And you can say, what's the opposite? And then just begin to focus on that opposite. So it's an incredible tool. You know, it's crazy how so many times throughout the day, I'll just be going through the day and just stop myself. And it's like, man, stop that line of thinking. That's not going to take me where I want to go. And anytime I find or I'm observing or I create this awareness, this clarity around these thoughts, and I don't like where they're going to take me, if I was to focus and act on them, call time out and turn the channel, go 180 degrees from it. Now refocus. And then sometimes it even takes self-talk, right? And the beauty of self-talk is this is the only time that you should listen less. And you should listen less and speak more to yourself, right? It's like God gave you 2 ears and 1 mouth, except unless you're communicating with yourself. It's like, man, it's like listen less, because the reason I say listen less is because so many of our thoughts are around, you know, survival, right? Fight or flight. You know, you get into stressful situations and it's fight. How do I calm it? Right? It's like you got to stand back and observe, get clarity, have awareness, and then use the tools to get to a place where you can perform at your best.
Definitely. You know, one of the things that I've been working on lately is just trying to, you know, one of the things with the pandemic and being remote working is how to shut off, you know, remote working literally at your home and then going to your home life, your personal family life, and trying to separate those two and putting one, not the emotion, into the other. And
so
that's a
difficult,
tough task.
you know, and so many people are working from home today, right? And it's kind of like that thing that a couple things can happen here. You can have home influences that keep you from doing the work you need to do. And then the opposite of that is because your home becomes now your office, it's like you're not getting away from your work and you're not resting, rejuvenating, and getting to a place where, you know, you have to be able to pull back to constantly maintain and stay in peak performance. And definitely they can kind of intersect and you can create problems. So, you know, I have a home office. I'm like most people around the country, especially going through the pandemic, did a lot of work at home. But one of the things you do is, like, when I leave my office, I close the door. And then I always remind myself, wherever my feet are, just be right there. Just be right there. If I'm with my kids and I'm not present with my kids are going to know that I'm not really there. I learned a valuable lesson. I was on a road trip one time for about 10 days. I came home and my beautiful wife and my children had made this unbelievable meal. Dad had been gone for a long time, and now we're going to have our first meal together. And I did a big mistake. I took this cell phone to my dinner table and I set it face down and it started buzzing. I looked at it and it was one of my working partners that was the place I just left to come back home to. And I said to my wife, I said, hey, this will only take a moment. I walked into my office, I took the call 45 minutes later, because what happened is I got hung up on the call. I got consumed on the call and I kind of lost all track of time. I go back to the dinner table and everyone's gone. My wife comes and puts a plate in front of me and she goes, it was a lot better when it was warm. And I was like, wow. And I kind of looked at her and I was like, oh no, it tastes great, you know? And all my kids have kind of eaten and moved on to the rooms and that sort of thing. And she says, wow, I wish you wouldn't have come home. And I was like, what? And I was like, wow. I go, honey, aren't you happy I'm home? She goes, yeah, but you didn't come home. You're here physically, but you didn't come home mentally. And here's what she said. How do you think our kids feel right now that call was more important in this moment than having family dinner after you being gone for almost 2 weeks? And I was like, the greatest lesson on being present with where you are and with the people you're with. See, when we're present, we edify the company we're around. When we're present, we're telling those people that they're special, right? And I was like, valuable lesson, wrote it in my journal. And I said to myself, Todd, this will never happen. And it's the constant reminder, and it takes practice. Wherever you are, just be there. I mean, think about how many people are at work thinking about vacation or on vacation thinking about work. So what happens? In both scenarios, you never get to live your best in that moment because you're focused on somewhere that's not where you reside at the time. It's crazy.
Definitely. So I'm going to move it a little bit forward so we could get towards all the questions. I got so many important ones to get to. So in the book, it mentions 8 forms of wealth or the circle of life, and I don't want to give them away really, but what area do you feel you need to focus on to get towards a 10 right now? And what does that 10 look like for you, Todd?
So to me, the most important 10, and I have a rating scale on all 8 forms of wealth, right? From 0 to 10, the place for me is, and the message that I want to get across is family. Look, you can be the richest guy in the world, but if you have a broken family, you are broke. So to me, the building family wealth and building my foundation around family and those relationships and those understanding and being in the present moment with the family and experiencing new experiences with your family, that's the greatest wealth of all. So for me, it starts and stops with family.
Yeah, definitely. Hey, power to you. I hope you get it faster and faster towards that 10. I know you'll be working towards it. All right. So one of the things here at Benzinga is that we refer to everyone as builders. And how has writing a book and gone through this kind of business process shown you that at the end of the day, people are the difference makers, to getting towards that massive accomplishment that we're looking for?
They truly are the difference makers. Matter of fact, my partner and I, we have a fund we run together, and it's a private fund, and it's where we have about 10, 12 different portfolio companies in there. And if you ask me and you said, Todd, what's the difference between that company and that company? And you weren't referring to the business plan or the company itself, I would always tell you the people. Matter of fact, when people would say, Todd, what's the difference between the team you had in 1991 with the Toronto Blue Jays that lost in the playoffs and the team you had in 1992 where you won a world championship? I said, it's easy. It's always the people. And matter of fact, one of the things that we do when we look at a business plan, more importantly than what the business is, we look at who are the people that are going to be running the business. Because we know that you can take an average business plan with great people and create great success. We also know you can take a great business plan with the wrong people and end up bankrupt. So I couldn't agree with you more in the program and everything. It's always the people, which is why it's so fun for me today is to serve and inspire and to impact and try to make a difference in people's lives.
Definitely. So one of the things that I noticed, and it's mentioned in the book, most people will think of baseball, but most people don't make the playoffs. What does it really take to get towards that level, Todd?
Man, I have to go back to what we were just talking about. Number one, it takes the right people, right? And those people, it's like that come together, that form a team. So whether it's in business and exceeding or excelling to certain levels, playoff type levels, championship type levels, it's being able to collectively have a group of people and get them all to pull the same rope, sharing the same vision, same purpose. And then everyone work really hard individually at being the best they can, not for them, but for the team. And if we'll focus, and in people in business, it's like whatever role you play, even if you're in the mailroom, You can make a difference. Doesn't matter what your role is in the company, whether you're the research analyst or whether you're the trader. See, if everyone is doing the best they can for the team, then you will always be pursuing the best version of yourself at the same time.
Definitely. I couldn't have said it better. And I'm looking forward towards passing it towards the company and the overall company so that we can hear this message also. All right. So the next thing I want to get into is, of course, the observer. And how did that play into when you got into your investing? How do you use the observer really to kind of stay in that edge?
Once again, it's like total awareness, total clarity. It's understanding the state of my mind, the mental state that I'm in, the emotional state I'm in. Look, there are times when the best trade is no trade. It's like if mentally I'm not in the right state and emotionally I'm not in the right state and I'm not feeling it, or I'm tentative, or maybe, my past is interfering with where I am at in this moment. The best trade is not to make one, and is to walk away and then to go get centered with yourself, and whatever it takes. For some people it's a run, for some people it might be a walk in nature, for others it might be a meditation, for another, it might be getting with your coach, but getting to a place where you can get back to where you can focus in the now, you can have the right mental state, the right emotional state, so that you can have the right focus to move forward. So look, about being an observer is about the ultimate observer is the person with unbelievable clarity and awareness about what's going on inside of them.
Yeah, definitely, at least we don't have it all as hard as, let's say, a 2-minute pitching mound.
Yeah.
All right. So the last thing I have here is, Todd, I read your book, and I would love to know what 2 or 3 books you would recommend to expand from your knowledge. That's always one of the best things is not only, is reading one book, but keep expanding that knowledge and being the ever learner. So what would you recommend for us?
Well, I'm an avid reader, and, I try to do 30 minutes to an hour every single day. And it's kind of one of those things. One of the principles in the book, The Observer, is maintaining the student mindset. And it's like, what can I learn today? So I'll just tell you the books that I'm reading today and studying today. When I say read, I really study books. And, I do a lot of underlining. I make a lot of notes. I do a lot of journaling. And then when I'm done underlining, journaling, then I try to pick one thing. And I try to take that one thing from that book that the author is coaching me on, and I go try to put it in action and kind of see where it falls and see what happens. But the books I'm reading today is Becoming Supernatural, Dr. Joe Dispenza. He really takes the whole mind and emotion to a whole different level. And it's pretty crazy that I wrote the book, The Observer, and then I just kind of came across Dr. Joe's book. And it's really about that study and about how you can, basically recircuit this thing. You can rebuild the way your brain works and operates and your heart and this whole thing. So Becoming Supernatural by Dr. Joe Dispenza, and then Change Your World by John Maxwell, one of the greatest leadership coaches ever. So, and I think about Change Your World, and it's like, once again, it's getting to that point of reflection. It's like, what can I do? It's like, one of the questions I love to ask myself at the end of every day is this the best I can do? And people get confused about it. I said, what I didn't ask is, did I give it my best? Of course I gave it my best, but no, that's not the question. The question is this the best I can do? And the beauty of that question is it always gives me an answer, and that answer provides me information for me to work on tomorrow. And that's the beauty of it.
2% better. We have a quote, from someone in the company that says, if we could just get better, 2% better every single day, then we'll work towards that goal.
There you go.
So, one of the things that I'm going to be working on is the 7-day challenge now due to the book. So definitely want to thank you for that. And one of the last ways I really would like to leave off is remembering, the legend, the sports psychologist and mentor. I'm sure a great friend to you, Todd, Harvey Dorfman. I learned some new things about him too. You know, I found out that, you know, he was a part of one of my favorite championship teams, the 1997 Florida Marlins, and he was actually in the dugout assisting the players and the pitchers while they were getting ready for the game. And I mean, I don't know if you remember that World Series, but to me, that was one of the best, and it will always be in my heart. So definitely want to give thanks to him, and I'll let you go ahead and leave off with a memory for Harvey, and definitely a shout out for Harvey.
Well, Harvey changed my life and really changed the direction of my life. And, you know, I met with him at a time where I had an internal battle that was going on inside of me. And even though I might have looked great from the outside, on the inside, I was really struggling. And I got a chance to meet with Harvey, where we booked a 2-hour meeting. It ended up going 12 hours long. And in the last hour, Harvey says, "Hey, you want to do me a favor?" And I said, "Yeah, anything, Harvey." And he goes, "Well, what do you think about going on a 7-day challenge?" I said, "I'm in." And he says, "Okay, here's the 7-day challenge." And he said, "Listen, Todd," he says, "every time you get stimulated, your mind gets stimulated, or your heart, your emotions become stimulated. And instead of reacting or responding," he says, "I don't want you to react or respond." He says, "All I want you to do is document." This is when I started journaling. Document your thoughts and document your feelings, your emotions. And he says, if someone cuts you off in traffic, and it's like that knee-jerk response. You're not allowed to respond. You can only document what you thought in that moment, and you can only document how you felt. He said, here's what he said to me: "I want you to observe your thoughts, and I want you to observe your emotions." He says, "And then in 7 days, we're going to take a look at that documentation of what was going on in your mind, the thoughts you were having, what was going on in your heart, the emotions you were going through. And then what me and you are going to do together is we're going to build a tool chest of models and principles to not only help you get into a peak state, but to help you stay there, where outside influences and things you can't control will make sure you're no longer focused on those things, so that you stay in the moment, so that you can master that." And I was blown away. And I will tell you that I got a chance to work with Harvey for a few years. And, you know, he truly changed the direction of my life. I owe this book, The Observer, to him, because all of the models and principles in this book somehow started with Harvey Dorfman. And, you know, my hope is that people will pick it up so we can pass on his legacy and his mindset and kind of how he viewed things and how he viewed peak performance, because, man, he was a champion and he's helped so many people. And he certainly helped me at a time where I needed help.
Yeah, definitely. You know, someone that really changed Major League overall. If you look at it now, 22 of the 30 Major League teams have sports psychologists on the staff. So definitely, you know, not only changing his own what was around him, but he actually changed the whole industry. And hopefully, you know, because of your book, is going to be able to change a whole lot of lives, not just only in baseball, but in a whole lot of different aspects. So thank you very much, Todd, for real.
Mitch, man, it's been a pleasure. And I'm honored, humbled once again to be on your show and hang out with you. And I really appreciate you having me on.
Yeah, definitely. So, guys, hey, I appreciate you joining us. Todd Stoudemire, 3-time World Series champion pitcher. And if you haven't gotten it, go ahead and grab it. Check it out, guys. The Observer, a modern fable on mastering your thoughts and emotions. If you really want to be a master of your process and get that level to that peak performance, definitely check it out. And couldn't say more to this book. So I'll see you guys next time on Peak Performance. Appreciate it, Todd.
You're awesome, brother. Thank you.
All right, what is going on, everybody? Welcome to the Roadmap. My name is Maz. We are missing Chris today. You know, he had some, weather difficulties out there, so I will be doing the intro. So shout out Chris. So this is the Roadmap, Benzinga's NFT show. We've had a lot of great guests over the past couple months. You know, we've had Art Blocks, Oni, the Doge Pound, Subtux, and many more. So we are excited to bring the Roadmap.
map. Oh man, that felt weird doing the intro. Chris usually does the intro, so I hope I did well with that. Shout out Chris if you're watching later on. So yeah, we are here today. We have a very special episode for you guys viewing today, and it's something that we don't like to talk about, but we definitely need to talk about, especially in the NFT space, which has blown up substantially over the last couple months. We're gonna talk taxes today. I know there's a lot of questions. I have a lot of questions myself. I see, misinformation everywhere. We don't know where to go with this. So it's going to be interesting to talk to some professionals today about taxes. So if you're watching this in the chat, leave us, some comments. We're going to be viewing them for the guys today. But yeah, let's get hyped up. We're talking taxes today. We're going to run the trailer to get you guys, warmed up for this episode. So let's do it. Yo, shout out to the trailer. Shout out Kashab for making the trailer. It's always a vibe when we see those. I see Peter in the background. He's getting hyped up looking at the trailer. So without further ado, let's bring these guys on. We have Peter and Richard. They are CPAs. They are in crypto. They're in NFTs. What's going on, guys? How are we feeling today?
Hey, excited to be here. I never thought that I'd be watching a trailer of myself and Rich in an awesome show just like that. But that got me hyped.
I saw you in the background, man. You were getting hyped up. I love it.
Yeah, we're really excited to be here and talk taxes, the most boring topic known to man. But hey, let's get started and try and see if we can give you guys some knowledge and help everybody out.
Absolutely, guys. So yeah, taxes, man. Like you said, it's a tough conversation to have, especially now more so than ever in NFTs. But before we get into that, tell us a little bit more about you guys. What made you interested in NFTs? That's what we're curious to hear.
Well, I guess first and foremost, my name is Peter Klein. I'm a licensed Virginia CPA with around 8 years of public accounting experience. And this right here is Richard Muterspow.
Hey guys, Peter and I both, like you said, are licensed CPAs in the state of Virginia. This will be 15 years of experience for me, all in public accounting, with a lot of individual and small business is pretty much what I specialize in. So kind of right up our alley. Really excited to get in and talk about that today.
Yeah. And I guess before we jump in, we just wanted to kind of add a little disclaimer that although we are Virginia certified public accountants, contents of this show are for informational purposes only and do not constitute an accountant and client relationship.
Love that. Absolutely.
And with that, what got me into NFTs? I first bought my first NFT, and it was NBA Top Shot. And it was extremely exciting at first, a little difficult to withdraw, but it was just a space that early on I wanted to get pretty involved with. And so my first OpenSea NFT purchase was actually a Bored Ape. I bought in for the small price of 0.24 Ethereum. And I've kind of bought and sold my way up until now, and I'm down to my one Bored Ape, and I'm kind of holding on to it for dear life.
That is awesome. What about you, Richard?
What got me into NFTs was that guy right over there. So we started working together in November of 2020, and we were initially in the daily fantasy sports space. That's kind of where we started tax preparation wise and collaborating together. And then Peter got into Top Shot back in the spring and told me about that. And it's like, dude, it's busy season. I'm so swamped. I don't have time to be, trading any of this stuff online. So like an idiot, I sat on the sidelines for a while. Then he got into the apes. And I started trading in probably July. And I do a little bit of trading, not quite on the level of Peter and what he's done this year, obviously. But both in the space, have wallets, do some trading on OpenSea and things like that, minting all the all the fun stuff. The lovely hidden folder everybody has, they're not proud of.
Yeah.
Losing transactions and gas fees and things like that. So it's a lot to take in and a lot to talk about, but we're excited to be here and do that with you guys.
Love that. I love the fact that you guys have experienced NFT space, and taken away from the CPA part and taxes. What has it been like to seeing such growth in NFTs? Peter, yourself, you got an ape at 0.24, which is absolutely amazing, and, doing the trades and stuff and just seeing so much growth. What has it been like for you both to experience that?
Well, it's been extremely exciting. This space as a whole just moves at the speed of light, it seems. And I really do feel like it felt like just yesterday when I was just kind of sitting in bed purchasing my first ape, and I remember at that point, and I was thinking to myself, I was like, what am I doing? Why am I buying this, digital monkey here? And I remember, talking to my girlfriend at the time, and she thought I was kind of crazy as well, but was actually extremely supportive. So big shout out to her.
That's awesome.
Yeah, it's been a lot of fun. I think one of the things that Peter and I have really enjoyed the most is the all of the people we've talked to and done consultations with and things like that is seeing the kind of money people have been able to make. But really, it's about how it's changed people's lives, very positively, right? It's not just about the money; it's about the freedom it's given them. They've kind of found a space, found a purpose. They found their people, their tribe, right? The discords they get into, the projects they get into, things like that. People are using profits from NFTs to pay off student loan debt, buy houses, buy cars, do things for their family and themselves that they never would have been able to do otherwise financially, based on their background and their history and things like that. So I think that's been the most exciting thing that we've seen so far is just what it's been able to do for so many people out there and give them an opportunity and an avenue that just wasn't available to them before. And that's one of the major ways that we're excited to see where this goes, because of how it's changing people's lives for the better, like that.
Yeah,
Love it.
You can make a lot of money or you can lose a lot of money kind of in this space.
Yes, you can. Yeah.
It's super exciting.
Exactly. I don't know if you guys have seen the meme. Have you seen that meme of it's like that person, that little stick figure, the tax reminder? Have you guys seen that one? It's a tax reminder with the O. There's always that person when you make gains. They're reminding you, hey, taxes. Don't forget taxes when you're trying to cash out. So, you guys being CPAs, what do we need to know? What are some of the basics that we need to know as NFT traders and taxes?
Yeah, I'll kind of kick it off. Cryptocurrency for tax purposes is treated as property. So you just have to realize that when you are essentially selling Ethereum or any sort of cryptocurrency, this triggers a taxable event. And so when you're purchasing an NFT, it's essentially the equivalent of you disposing of the underlying cryptocurrency associated with that purchase. And so that in and of itself triggers a taxable event. And also when you go to sell your NFT itself. So just keep in mind that when you're buying an NFT, that's the equivalent of selling the underlying crypto, and then ultimately selling the NFT itself constitutes another taxable event in and of itself.
Interesting. So, we make a bunch of trades a day, you guys being traders as well. What are some of the best ways for us to track our trades? Or if we haven't been tracking this whole year, what can I do to kind of get organized and see what I need to report?
So I would definitely recommend leveraging all of the different software that's out there. So currently we have paid subscriptions to ZenLedger, TokenTax, Coinly, and this isn't a paid advertisement, shill. It's just genuinely the software that we've kind of leveraged on our end as accountants. And what we'll do is we'll kind of piece together estimated NFT related taxable income on the year by using these various softwares. But if you haven't been keeping track of your transaction history in Excel, one, it's not too late. We still have a couple more weeks left on the year. And also going into 2022, it's important to do a little bit of legwork on your end to hopefully keep a transaction history, because the reports that we can kind of pull from these different softwares they're not necessarily accurate. And so it's good to have a separate source of accounting records that you can use to ultimately cross-check some of your activity.
Mm-hmm. Yeah, but there are certainly issues with a lot of the programming that it's all in its infancy, right? This is really the first year we've seen this kind of activity. So a lot of these programs weren't necessarily initially written for, especially NFT trading. A lot of it is tied into the underlying cryptocurrency trading itself, and so that's what the platforms were more built for. And they're trying to evolve those platforms to pull in DeFi and pull in NFT trading too, right? So there's a lot of bugs to be worked out. It's going to take a couple of years for these programs to really fine tune and get themselves to a point where anybody feels truly comfortable leveraging that program in the reports it uses 100%. It's just going to take a long time. And some of the more common things we're finding issues with in the programs are it does have a lot of trouble picking up mints. When you go directly through the site to mint an NFT, it does at times tend to struggle because you're essentially sending, ETH out of your wallet, right, to a third-party site. And so it doesn't necessarily pull that in from Etherscan properly when it tries to leverage that Etherscan, pull, right? And then beyond that, there are, if you're trading, if you're swapping NFTs between wallets that you own, the programs have no idea what to do with that because all it sees is something go out of your wallet, but it doesn't track that it also went into another wallet that you own. It has a really hard time with that communication issue. Same thing when we're talking about, coin swapping, DeFi, that kind of stuff, staking. Pretty much whenever anything exits that Etherscan, right, and it can't pick up what happens to it from there. The programs have a really challenging time determining what happened, and it just kind of spits out basically zeros because it doesn't know what to do with it. And so that's where, that record keeping on a personal level is really, really important moving forward. In terms of if you are into doing a lot of DeFi type activity, play to earn, staking, anything like that, to try and find a way to keep your own record keeping or find something that you can leverage in order to track that stuff and track what you're actually doing with your, with your crypto and what's happening to it and what kind of gains you're looking at, because the programming's just not there. And a lot of those services don't really have good reports that you can use, whether it's a CSV or anything else that you can leverage for your own tax prep or to have someone like us take it and do anything with it for you. It's just really, really hard with some of those things. And the tax programs aren't there yet. Some of them work better than other ones for different things. And we're finding a methodology that works for us to piece everything together. But we're having to work with clients to, tap into their own resources to sort of help fix some of these issues because we don't have access and can't pull certain reports to do that from our end, right? So, there's a plethora of things out there. A lot of them are paid. There might be a few free ones, but everything's still working out a lot of kinks, and it's just kind of doing the best we can and trying to make it as accurate as possible at this point.
Yeah, there's such a gray area in crypto and NFTs specifically with the amount of volume we've seen in all these, things that haven't been done before. Question for you guys is, I'm in a bunch of Discords and the tax question comes up, a little more so now since we're approaching the end of the year. And, a lot of people, they feel like they're not going to report, their mindset is I'm not reporting until I put it into my US, bank account. So they don't plan on reporting this year unless, they're going to actually put Ethereum into the US dollar into their bank account. What advice do you have for, these people? And it seems to be a large majority, which, seem to think, hey, I'm not reporting anything because number one, I haven't reported my wallet. I haven't KYC'd. Number two, it's still Ethereum. So I see that a lot.
Yeah. Oh yeah. That's the prevailing thought out there a lot. Peter, what's one of my favorite things to say about the IRS?
They're slow, but they are not. They're slow, but they're not stupid.
Right. So the IRS right now does not have the manpower and does not have the technological capability that they've made public to track all of this stuff and see what everyone's doing on blockchain. Right.
Yeah.
They may be able to do that, and we just don't know that at this point. But the most important thing from our perspective is to be ahead of the game and be proactive in your reporting. Because if you do it now, yes, it sucks to pay taxes. No one likes paying taxes, right? It sucks for all that hard work you did and to have give some of that money to the federal government. We get that. But at the same time, it is money you've earned, it doesn't matter if you've pulled it out into US dollars. The way the tax code written is, once that transaction takes place, that constitutes a taxable event that generates income or a loss, and you're required to report that, right? And we're always going to tell people that they need to do that from our end, to save ourselves and to save you and protect you, right? Because the IRS typically only has a 3-year window to go back and audit an individual for tax purposes, right? So they basically can go back 3 years under normal circumstances. If they catch something that you underreported, didn't report something, they can go into that window of time. However, if the IRS can prove that you were negligent intentionally, you committed tax evasion or tax fraud, they can go back into perpetuity. So if at some point down the line, when this really goes mainstream for tax reporting purposes and the IRS is able to have some kind of system where they're able to review a lot of this stuff, and they put you under an audit, and then they can go back and determine that starting 8 years ago that you didn't report any of your crypto and your NFT activity, they can technically go after all of that, right? They can go all the way back into that time in that case if they can prove that you did it intentionally and on purpose. So we really want to protect everyone and make sure that they're doing the right thing. And so it's really important to stay on top of that and be proactive in your tax reporting. It's not fun. Nobody likes that in the US, but it's the necessary evil, and it keeps you out of trouble. And that way you can go to bed at night knowing you don't have to worry about any issues down the line.
Yeah. And,
go for it.
OpenSea and MetaMask might not have your personal information and, KYC, but ultimately, Coinbase, Binance, whatever wallet you're using most likely does. And eventually you're going to have to transfer some of that cryptocurrency to fiat unless otherwise. And in a nutshell, you're going to have to eventually convert those to dollars and to your financial institution as well. And so there is a little bit of KYC and safeguards already in place there. So definitely to be more proactive than reactive and self-report.
Yep, absolutely. And on top of that too, just to touch on something I know we're going to talk about here in a bit is, new potential tax law changes coming. So the recent infrastructure bill that was passed through Congress, and we're kind of waiting to make sure that it goes into effect as law starting this coming year, right? The president has signed that, and so part of the tax law changes tied to that are the Treasury Department and the IRS are intending to make a lot of these major platforms like OpenSea and MetaMask. They're probably going to go after a lot of them that see at least moderate to high volume trading and activity moving forward. The intent is to make them register as a security exchange with the IRS in the SEC. And so essentially, they're going to try and treat them very similarly to, say, like an E-Trade or a TD Ameritrade, something along those lines, where if you have if you have an account with any of those platforms currently, you have to disclose all of your personal information. You have to disclose name, address, social security number. And when the end of the year comes around and there are tax reporting requirements based on activity in your account, they issue you a 1099-B form, which is the tax form tied to interest, dividends, and stock transactions, amongst some other things, right? So the intent of this new tax law change is they're going to try to force a lot of these platforms, and we don't have an exact roadmap for how they're going to do it and who they're going to determine, but it stands to reason that MetaMask, OpenSea, those kind of platforms are going to be required to be part of this, that they're going to have the same reporting requirements. So in other words, that at some point we're going to have to disclose our personal information to these platforms in order to continue to trade on them, right? So eventually we're going to start receiving actual official tax documentation where those platforms will be required to track cost basis for us and actually report our gains, and then we won't have a choice but to file it at that point. So we're better off being ahead of that now and getting in front of it and getting used to that reporting. And then ideally down the line, we're going to get, hopefully, fingers crossed, what are going to be accurate tax reports that we'll be able to use in our tax filings, in a couple of years. The timeline is they want that to be in place as of January 1, 2023. So basically those platforms have about 12 and a half months in order to get themselves set up and prepared. And then starting in that calendar year, according to the new bill, they're going to force these platforms to start having reporting requirements. And so when people go to do their 2023 taxes in 2024, that you'll actually have official tax forms that will have all of your trading activity on it, and you will have to report that on your taxes.
Yeah. And
Wow.
with everything being so, transparent on the blockchain, right? You don't want to get into a situation in which it's like you're getting ready to file your 2023 return. You got your tax forms from OpenSea, and then they're kind of circling back to your previous years, and they're like, oh, you had some taxable income back in 2021. Where are you reporting it on your tax return? And so definitely better to get ahead of the game there.
Dude, all I can think about, just looking at the comment here is I'm effed. I feel like a lot of us, this is a reality check we didn't think about this year. So this is amazing insight. Holy crap. Like there's a bunch of work to do. So we appreciate this. So question for you guys, thinking about next year and moving on. Let's say this year is just a complete mess. There's just a bunch of transactions. It's just a mess, right? So moving forward next year, let's say I want to get organized, what is the best way to do that? Do I make an LLC, or do I, hire someone to do, quarterly talks? How can I structure my NFTs to be more organized, to kind of go with these requirements that are going to happen, in the next couple of years?
I would say start off by keeping some pretty good accounting records, right? And it doesn't have to be anything complicated or crazy. Ultimately, you just really need to record the costs of the NFT that you're purchasing or selling, any transaction fees associated, and essentially the spot price of Ethereum if you're trading on OpenSea, kind of at that point in time. So definitely never too late to get started keeping a detailed accounting record, but I'd start with a simple Excel spreadsheet starting off.
Yep, and we do have a couple of situations with clients we're working with where we plan to do sort of a quarterly reconciliation of their wallets, moving forward, right? It's sort of at the end of each quarter in 2022, we'll sort of be doing a review of the activity they've had year to date, so they can track their profitability, and we can kind of close those gaps throughout the year when it's a little bit fresher, as opposed to waiting until December or January and being like, hey, here's a whole year worth of stuff. These are all the issues that we can't quite figure out. We need you to dive all the way back to March of 2021 and help us, figure out the holes here, right? The idea would be if you're on top of that kind of on a quarterly basis or something like that, where you are doing some kind of review of your Etherscan or leveraging one of these tax programs to, run some reports and sort of see where it's having issues with specific transactions. That's a really good place to start, beyond just looking at some kind of basic spreadsheet to sort of track your activity. We realize if you're trading thousands of NFTs a year, that's quite tedious, and so it's just finding some kind of middle ground where you can track your activity in some capacity to make sure you're on top of it, because that way what your profitability is tracking throughout the year. Instead of getting all the way to the end and going, oh my God, I made X amount of money and I've paid nothing in, and now I have to figure out how to liquidate, some of my ETH or whatever currency it is in order to pay my tax bill. And we're going to see a big issue with that over the next 3.5 months, right? It's as people start getting into doing their taxes, they're going to realize how much liquidity they need to pay that bill, and not a lot of people are prepared for that right now. And so it's going to be a very reactive process in that case. But moving forward, if people are really on top of things and are kind of reviewing that at least a handful of times a year, that they can better plan for that and be a little bit more on top of that liquidity that they're going to need for all that reporting they're going to have to do and the taxes they're going to need to pay, right? So those are kind of the biggest things, finding some kind of program that leverages it properly in your own records, right? As far as the idea of like an LLC, we can kind of dig into that now. That's totally fine. So the idea is that for the most part, most people will treat their NFT activity as a trade. Like there's trading very similar to say, stocks, cryptocurrencies themselves, or like collectibles, right? Physical artwork, trading cards, that kind of stuff, right? The stance that we're working with now is that NFTs will be treated as a collectible, as opposed to being treated the same way as a stock. Now, in the short term, that doesn't mean anything. Like less than a year, it's the same tax rate. It's just whatever your tax rate is based on those graduated tax brackets, right? When you get to a year or more, when you treat something as a collectible, the maximum tax rate you're going to pay on that is 28%, right? That's the cap at a federal level that you'll pay on. Until the IRS tells us otherwise, that is the methodology that we're working with, right? And we're inferring that from what's actually in the tax code and similar items that we're looking at, okay? The alternative is to actually treat your NFT activity as a trader business. You don't have to create an LLC for that. You can create one, but it's not a requirement. Or you can actually like incorporate and become either a C corporation, like a standard corporation, or you can become an S corporation, right? There are some distinct advantages depending on what profitability level you have, whether that makes any sense or not. You know, the idea of going that trader business route works in the sense that you can actually write off expenses against your profits. So that would be like, you know, a home office deduction, you know, a portion of your home internet costs, you know, if you travel to say, you know, NFT NYC, Art Basel, anything like that, those travel costs can be included, especially if you're doing some kind of networking and things like that. You know, beyond that, if this is what you're doing full time, if you have a health insurance policy and you're profitable, you can write off your health insurance premiums against that profit. We're discussing with some of our clients actually setting up what we call a SEP IRA plan, which is like one type of retirement plan where we can basically funnel money into, you know, an IRA type account and get pretty aggressive in how much money you can put in there. And that actually is one really nice tax saving mechanism when you go that route. But going that route does do two very distinct things. One is that you have to treat your NFT trading income as regular rate income moving forward. You don't, even if you hold something a year, you don't get to take advantage of that collectible tax rate, right, of that 28% cap. So if you're someone that's trading and you're making, say, $500,000 a year or more, you don't get to take advantage of that max 28% tax rate on anything you hold more than a year when you actually consider yourself a trader of NFTs, because everything converts to an actual business model, right? So that is one disadvantage, especially if you're someone who's holding anything blue chip for more than a year, where you would want to take advantage of that lower tax rate. The secondary thing is that it does subject you to employment taxes, right? So when you are an employee and you work for a company, you're on a W-2, your wages are subject to Social Security and Medicare tax in the United States, right? And that's a combined 7.65% tax on top of your income tax. So, and essentially that money funnels into the federal Social Security and Medicare programs to fund that nationwide, right? Then your employer is responsible for matching that amount, okay? So you pay 7.65% on your earnings, they match that. It comes out to a little over 15% combined. When you are self-employed and you're running everything as an NFT trader business, you're actually considered the employee and the employer. You're both sides of the equation. So you're actually subject to the entire amount. And so the problem is when you treat yourself as a trader business, you're subject to your regular income tax rate, right? But then you're also slapped with an additional up to 15.5% taxes almost.
Oh my gosh.
Yeah, it makes it really tough. So really you need to be in a kind of profit range that makes sense and enough deductions that justify that, right? Because if there's enough expenses we can take and get you into a nice range, then it can make sense to go that route. But for a lot of people, it's really tough to justify it, especially if this is what you're doing full time for a living and that's it. You know, if you've got a full-time job and you're actually you know, working and you're already paying into Social Security and Medicare through a day job and you're doing this at night and, you know, never sleeping like some people, it seems, they're sleeping like an hour a night NFTs, then it changes the equation because it makes it much more palatable because there's a cap on that Social Security tax you pay. So the additional tax you're paying shrinks significantly. It makes it a little bit more appealing. And also if you're someone who's trading consistently and you're not holding anything long-term, that's the other reason that it would be really appealing to look at that option, right? But the one biggest misconception about treating yourself as a trader business that we see out there floating around on, you know, Twitter and in Discord and things like that is when you have NFTs in your wallet, when you're a trader business, when you buy an NFT, that becomes inventory, right? You don't get to write that off immediately. You only get to write off the cost of an NFT when you actually sell it. So if you've got 200K of NFTs sitting in your wallet and you treat yourself as a trader business, you don't get to write that off in the year you bought them. You don't get to write those off until you actually sell them, right? Because then they become basically what we call a cost of goods sold. So the biggest misconception is, well, I'm just going to treat myself as a trader and write off all my purchases this year and reduce my income. And then I'll worry about, you know, correcting that and fixing it later when I pick up the income next year. But that's just not how the tax code works. And so just to kind of clear up that issue, that's one of the big misconceptions we see out there that we want to make sure people understand conceptually how that works. So there are instances where it can make a lot of sense to be a trader. It just depends. And that's where talking to someone like us, we can help you run those numbers and see whether it's the right move or not, right? Because it's completely dictated on your individual specific situation.
Yeah. So
Yeah.
your NFT activity is going to be treated and reported on Schedule D, which is kind of where your stocks and crypto would go, or it would go on your Schedule C, which is where your trader business income activity would go. But ultimately, it kind of differs based on a case-by-case scenario. And so it's important to talk to a licensed professional before kind of deciding on the best course of action.
Absolutely, man. This is absolutely astonishing because, you know, for example, I know a lot of kids, you know, 16, 17, 18-year-olds, dude, they've made almost 7 figures in NFTs this year. They probably don't even know what taxes are. So it's going to be insane to see how this plays out over time. And I'm sure there's going to be a lot of, you know, the IRS is going to come calling for a lot of people sooner or later. So this is great info, guys. Question for you guys, as far as lessening the tax burden, right? So we see Ethereum. Biggest thing we see all the time is gas fees, right? We pay so much in gas per year. You know, I want to pull up this image here of Pranksy that he posted. You know, he spent $1.94 million, right? So, you know, is this something that we can write off when we do our taxes?
Yeah. So let's tackle that in just to kind of disclaim this, okay? As we sort of discussed already, there are a lot of gray areas in tax right now that tie to NFT activity. So if you talk to 100 CPAs that are in the space, which if you can even find 100 CPAs in the space, good luck. But if you did, a lot of us are going to have differing opinions on this, okay? Because it's the stance that Peter and I kind of have reasoned out and that we're taking on this, and we realize that this is a bit of an aggressive stance in the circumstances, is that whenever you trade an NFT or acquire an NFT and there's a gas transaction tied to it, that essentially that we feel that is tied into the cost basis of acquiring the NFT itself. And then when you sell it, it is a reduction of the sale price of the NFT when you relinquish that NFT out of your wallet, right? It is a transaction directly tied to the acquisition and sale of the NFT. And therefore, we believe that it should be tied into each individual transaction, right? There are CPAs out there that I will not say that we all agree on that. Some of them think that that's just the cost of doing business and that you wouldn't deduct that unless you are considering yourself an active trader and treating yourself as a trader business. We don't really agree with that stance because the kind of reasoning behind that is, like, if you're trading in the stock market, whenever you have a stock trade and you have to pay a transaction fee to the brokerage house, that isn't necessarily built into the sale transaction of your individual stock in that instance. But again, NFTs aren't treated the same way as stocks are through the, you know, actually active publicly traded exchanges, right? We kind of treat it parallel to like real estate. So, you know, if you own a piece of real estate and you sell it and you have closing costs at the time that you sell, say, a rental property or a piece of, you know, investment land that you own, when you report that sale transaction, you actually include your selling costs, commissions, concessions made in the sale, all those kind of things. Those are built into that sale and they reduce the amount of profit you pay taxes on. NFTs are more treated like a piece of property, very similar to real estate in that respect, than they are an actual security exchange that's traded on any of the publicly traded, you know, public exchanges in the United States or anywhere else, right? So we feel pretty strongly that that is something that is deductible. And it's deductible in the year that it's tied to those, you know, actual NFTs, right? One of the kind of things about, you know, the that image with Pranksy is that that's based on the current gas price and the amount of the amount of gas that he's you know transacted this year. So it's a little hard that it's not the completely accurate number. It could actually be higher than that. It might be lower than that. But you know, there are different sites and services out there where you can pull and you can sort of see what your actual spot price gas transactions are. So we're kind of tinkering around with that to see how accurate it is. But we do feel that that should be included in the cost basis and a reduction of the profit that you're paying on the NFTs you're actually trading on a year-to-year basis.
Yeah, that makes sense.
Yeah.
You know, you guys mentioned earlier, there's a lot of money to be made in NFTs, but also you lose a lot of money sometimes. We all have that hidden wallet, right? So we have, you know, all those losses or all those things we don't want to be reminded of. We have them hidden in our wallets. Is there a benefit to selling those items at a loss, or do we hold them as far as when it comes to taxes?
Man, I'll visit that hidden folder when I need to be humble, man. When I'm just feeling way too good, I'll take a look at that hidden folder and I'll come back down to earth really quickly.
Oh yeah. Oh man, it's definitely humbling.
Yeah, in the accounting world, what we want to do is we want to accelerate deductions and defer income. So if there are some NFTs that are essentially worthless now and you bought it at a certain price point, what you want to do is you want to more likely than not accelerate that deduction, assuming that you have NFT income on the year. And so, you know, if you're looking through your hidden wallet and you see, you know, a Super Yeti, it's actually making a bounce back at the moment. But if you see some NFTs that you think can be sold at a loss, it might be in your best interest to list them at 0.00001, realize that loss when it sells, and ultimately offset that loss with some of your gain from your other NFT activity. On the flip side, if you are a long-term holder of a project such as, you know, an ape or a gutter cat, it might be in your best interest to essentially sell it in 2022 versus in this year to defer that income a whole tax year down the road. It's just a perfectly legal way to kind of reduce your tax liability at year end and also kind of tax plan appropriately for anything to come.
Mm-hmm. Yeah, and in addition to that, even active projects, you know, maybe you bought something at a peak and you paid 2.5 ETH for it, but the floor right now is like half an ETH. And, you know, in those instances, you can still sell at a loss. It doesn't have to be a project that's dead. It can still be an active project that's just in a dip. And if you bought way above that price or even moderately above it, you can still sell at that you know floor, and you can even sell below floor in order to realize a tax loss, right? We call that tax loss harvesting. That is completely legal. There's nothing that says you can't do that, right? And so if you have things in your wallet that aren't necessarily in the hidden folder, but they're things where the prices really dip from where you bought in, it isn't a bad idea to sell some of that stuff if you are open to the idea and you can live with the fact that you just are going to eat a loss on that, because it actually gives you some liquidity, right? If you're selling something at 0.001, you know, that may cover the gas fee in the transaction, it might not, but it doesn't really give you any of that cash liquidity ETH liquidity in this case, in order to, you know, liquidate that into cash to pay your tax bill. But if you've got something you can sell for 1/4 of an ETH, a half an ETH, even an ETH or something like that, at least that's getting you some liquidity in this equation that you can use moving forward in terms of helping to pay that tax burden when the time comes in the spring, right? And there's nothing that says that you can't buy right back into that project. You could literally have bought an NFT in a project at 3 ETH, sell it at half an ETH at floor, turn right back around and buy in at floor and either buy the same one back for a little bit more or buy a different one and just kind of, you know, if it's a project you really want to be in and think long term, it's something you think is going to take off, or you just really love the project or the team and you want to be involved in it, and you've got one that, you know, maybe is a floor item or barely above and it's just really not worth comparative to the market what you paid for it, sell that one off, buy another one, get right back into the project and realize a tax loss at the same time. So it's kind of the best of both worlds when you look at it in that respect. But like Peter said, the important thing is to take losses as much as you can before the end of the year, where it's feasible, and push off, you know, profits into next year, because that just gives us an entire year of that planning that we were talking about, of reconciling your wallet and being ahead of it and being able to get your liquidity in order. You know, even if you sell on January 1 at 12:03 a.m., that's next year. Waiting those 4 extra minutes pushes it into an entirely new tax year. So in that case, it's a no-brainer to do that, especially if you're someone who's looking at quite a bit of profit this year and you're concerned about that tax bill. If it's feasible at all, push those profits off into January of 2022 or out, just because it's just going to save you so much headache and give you a whole year to prepare for that tax hit next time.
Yeah. So wash sale rules at this moment in time only apply to securities. And so this may change going forward, but for tax year 2021, it's perfectly legal to tax loss harvest in these situations.
Yep, and to piggyback on that, the big push right now is to remove wash sale, to implement wash sale rules for cryptocurrencies, but there's no discussion as of now of doing it for NFTs. And so the wash sale rule is basically that if you own a security on one of the public exchanges, say a share of Apple, and you sell it at a loss, you can't buy back that same stock within 30 days and actually take that tax loss. So if you lose on an individual stock, you can't buy the same one back within a 30-day window and actually be able to take that loss on your tax return. It actually is reported on those exchange forms, those 1099-Bs we're talking about, as a disallowed loss. So it shows on there, but you're not allowed to take it for tax purposes. Right now, even with cryptocurrencies, you can actually sell at a loss and buy back the same day. So maybe if you bought into Bitcoin when it was way up, or you bought ETH at the peak, and it is, as we know, it took a hard drop in the last couple of weeks, you could actually liquidate at the floor, realize a massive loss there, and then buy right back in at that floor price, and reset your cost basis in your ETH and realize a tax loss at the same time, because the IRS does not have wash sale rules for cryptocurrencies in addition to NFTs. So that's something to keep in mind if you're actually a cryptocurrency trader and you've got a lot of losses sitting in your wallet, and even if you want to get back into that same currency, liquidate those losses and realize that tax loss, because it does offset gains in NFTs this year. And then you can just buy right back in and reset your cost basis on your currencies too. So a couple of really easy ways in order to get some losses in your wallet to help reduce that tax burden we're talking about.
Yeah.
Yeah, no, that's awesome.
A couple of final notes while we're on the topic of kind of reducing your tax liability. If you kind of have some NFTs that just are flat out worthless, you could definitely bundle them up and kind of sell them as kind of a package deal for like 0.0001 ETH to kind of realize that loss. Because oftentimes you'll find that some of the more worthless NFTs, truly nobody wants them. And so it helps to bundle them. It helps to essentially burn them. Anything that you can do in tax year 2021, if you're at an NFT related income, to kind of offset those gains would be more than helpful to reduce your tax liability legally. Yep. Also, you can also do a little bit of additional tax planning. Different states have different state income tax rates. If you're essentially deferring some of your income into tax year 2022, that gives you some opportunity to essentially move to a more tax-friendly state. So I'm talking Texas, I'm talking Florida. There are just some added opportunities to kind of move and tax plan around that way. Also, personally, what is most likely going to work for me is in tax year 2022, I plan to be getting married. And what that's going to do is it's going to put some of my NFT related income at a lower marginal income tax rate. And so if you have a significant other that, you plan to spend the rest of your life with, it's not a bad idea to marry for tax purposes, but obviously more important for love first. But some tax saving strategies from that perspective.
This is not marriage advice, by the way.
The real alpha is get married, though. That's the real alpha. I just heard, right?
We're not in the business of giving marriage advice. You can ask my wife and Peter's fiance. Trust us, we're not. We have no business giving marriage advice. But for tax purposes, it makes a lot of sense. And so, you can also burn stuff off like Peter mentioned, and just basically transfer to an inaccessible wallet that you have no control over. And even though you don't get any funding out of it back to you, right? You can write off the cost of the NFT and the gas fees associated with purchasing it and burning it off into that inaccessible wallet. So in addition to trying to bundle or sell things at floor or lower, that's another thing you can do. One thing to mention, though, is don't sell NFTs at a loss to family members. If it is a related party, like a sibling, a parent, a kid, anything like that, if you sell to them at a loss, you're technically not supposed to take that because it's called a related party loss, and those are non-deductible. Okay. So don't sell your dad something at a loss and try to report that on tax purposes if your dad actually knows what an NFT is and has a wallet. So that kind of thing, keep that in mind. You cannot take a tax loss for gifting NFTs either. So if you've got some buddies or anything that you want to get into NFTs and you want to, give them some NFTs out of your wallet, that does not constitute a tax loss. That's considered a gift. Okay. You could sell it to them for pretty cheap, especially if it's not like a family member and realize a tax loss, but you can't actually give it to them and consider that a tax write-off. You can't write that off as a charitable contribution either, because those have to be made to qualifying, 501c charitable organizations in order for that to be considered an actual charitable donation for the year.
Wow, man, just so much. And you guys took the question I was going to ask. Can I gift, my family or friends an NFT and write that off? So that's a great point there. I'm sure people are trying any tricks they can to just try to avoid taxes. And I think, the best way to do it is just to tackle it head on, like you guys have mentioned. A lot of great info there. I wanted to switch really quick though. On Twitter, we see a headline every day. We see fat fingers a lot, right? So we see someone list their Bored Ape for 0.75 ETH instead of 75 ETH. Let's say they bought the Bored Ape at, let's say, 50 ETH. They list it for 0.75. That is technically a loss, correct?
Mm-hmm.
Yeah,
Yep.
So we see that happen a lot. So yeah, I'm curious to see how that affects taxes. And also, what happens, let's say I have my wallet and I get hacked, right? Let's say I lose my wallet or someone steals all my NFTs or all my Ethereum. How would that work for tax purposes?
If somebody just fat fingers the price, and we do see that happen, unfortunately, that's a tax loss. I mean, it's a public trade. It's right there on the blockchain. Maybe you didn't mean to sell it for that price, but you did, and somebody swiped it before you could fix it. It is what it is. It's a mistake, but it happens. It would be no different than if you were in an E-Trade account and you accidentally listed stock at for sale and it's in a big dip and you sell it at a loss. It still counts as a tax loss. The whole idea of your wallet getting hacked or something like that, you kind of lose that the NFTs in it, you lose your ETH, anything like that. That's a really tricky question because there's not a lot of guidance in general about a situation like that. Technically those are considered, what they call a casualty loss. And so they have to be treated a certain way for tax purposes where there's a lot of mechanics involved on whether would be constituted as a tax deductible loss or not. If you get into a situation like that, you really need to talk to a CPA or a tax attorney so that they can kind of help you navigate that and determine what options you have there. It's hard to get into the specifics of that because that's a very nuanced subject and it goes really deep, like super deep in terms of how you calculate that and what's deductible.
All right, traders, I'm going to go ahead and jump on in here, guys. If you guys want to finish this episode of Roadmap, definitely check it out, guys. It's called the NFT Taxes, and definitely check out the roadmap. Up next, we got At the Close, you guys. I know you guys want to go ahead and check it on out, so you guys get on over there to At the Close. We got Spencer and Joel Elkanan going into the market. What happened today? Find out. See you guys there.